Good morning. We welcome you all to our today's seminar on GST and income tax, shaping India's future. I now request the chairperson of the Fiscal Affairs and Taxation National Committee, Mr. Vivek Jalan, to please be on the dais and deliver the welcome address.
Good morning to all the delegates present over here, and thank you for joining this whole day seminar on taxation. We also recognize the presence of Mr. Arun Jhajar from GST Network, who has kindly consented to travel all the way from Delhi to take a session for our members and members of the trade and industry. Mr. Kedia, the Commissioner of CGST North Zone in Calcutta, he would be soon joining. Friends, these are exciting times. These are also dynamic times. And not very often do you see India, who is awaiting a new revenue secretary. You all know that our Honorable Revenue Secretary, now he is the Governor of RBI. He has taken charge from the 11th. Not very often also, do we get a mail from a Revenue Secretary on Friday, regarding our points from Bengal Chamber on the issues in the taxation law, and when we travel, to Delhi, on Monday, we find that, there is a change in guard. So these are really exciting times, but these are also dynamic times. As you see that the government of India is also gearing up every day to live up to the expectations of not only the citizens of this country, 65% of whom are in the working age, but it also is gearing up to live up to the global situation which we see ourselves in, and where India is the bright spot. We are seeing changes everywhere in the geopolitical scenario. We are also seeing great changes in the taxation law. The changes which happened in first 65 years of independence, I think more than that has happened in the last 10 years of independence in taxation. We have seen the introduction of GST, and we have seen a journey of GST from 1st of July 2017. Now, after the Honorable Finance Minister's budget speech in para 137 in July 2023, we are all awaiting for a comprehensive revamp in the Income Tax Act, or a comprehensive review. You may have seen the media articles talking about direct tax code. So if not direct tax code, it would certainly be a comprehensive revamp of Income Tax Act. We have seen that income tax assessments, appeals, etc. have gone completely faceless over the last few years. We are also witnessing an era very soon where a global minimum tax, Pillar 1 or Pillar 2 will come very soon, and Pillar 1 would also see light of day, in the times to come. So we will see an entirely global unified taxation system. We are seeing a new PAN 2.0 in income tax, which would certainly change the procedural landscape in income tax. We are seeing new invoice management system in GST. I am sure all of you have many questions. Our Honorable Commissioner Sir is here, and Mr. Shashar is there from GST network to answer all your questions on the invoice management system. We are hearing about hard locking of the figures in GSTR 3B going forward. And we are seeing an era, at least an initiation from what we understand, an era where GST hearings would also be, if not faceless, but at least virtual. In customs, we have already seen over the last few years that assessments have become faceless. We are seeing an era where in the foreign trade policy, slowly but steadily, the incentives, so to say, or reimbursement of taxes on export products, that is being phased out or eased, and we are gearing up in the next year for Trump 2.0. And we all know what to expect going forward, as globally every country in the world tries to protect its own interest first, and rightly so. So friends, there was a time where the companies, the trade and commerce, they had a service tax professional, they had a VAT professional, income tax professional, international tax professional, and customs professional to take care of the taxation function. 5 professionals and as many consultants possibly. Going forward, what we see, there is a steady shift in the way even businesses are reacting to the global dynamic scenario, where possibly we will see one tax professional for handling the taxation function, because we are seeing slowly there is a lot of intermingling. Already we are seeing customs, GST and income tax, they are slowly intermingling. And that is why last year we had our first edition of a full day tax workshop, including GST and income tax, as both these laws take India forward. This is our second edition of our annual tax workshop. We hope that you have a lot of takeaways from the various speakers. We have a panel of government officers, starting with our commissioner sir here. We have Nasin also, Nasin speaker, which is the educational wing of the central government for indirect taxes, and we have trade and industry speakers also. So again, thank you very much for all of you for joining, and happy learning. Thank you very much.
We are pleased to welcome our guest of honor for the seminar, Mr. Manoj Kedia sir, Principal Commissioner of CGST and CX North, Central Board of Indirect Taxes and Customs. I request sir to honor us and please be on the dais. I also request Mr. Jalan to please join in conversation with Mr. Kedia sir.
So, first of all, good morning, sir, and thank you very much for joining. Even last year, you were there in this workshop of the Bengal Chamber of Commerce, and thank you very much for joining here and accepting our request for this workshop. So, sir, first of all, all taxpayers have many queries, and we as a Chamber of Commerce, just to give you a brief, we have more than 1,000 members, and from the eastern region, we are one of the oldest, in fact I would say the oldest Chamber of Commerce in India, representing aspirations of the not only eastern region, and now we have an office in Delhi also from the chamber. So we are there to represent the trade and commerce and the aspirations across India. So sir, first of all, in this session, I would start with, your views on how GST is shaping India's future in this dynamic time, sir.
Thank you, Vivek. Good morning to all. So basically, we are here to discuss about the GST, its futures, the problems which the trade is facing, and the department is also facing the problem with the GST. As far as, let me just categorize the type of trade. Basically, you are representing the large taxpayers, so there is no problem with that. So we have large taxpayers, medium taxpayers, and the small taxpayers, very small, tiny taxpayers also, because you know that the turnover after 20 lakhs, they have to pay tax, maybe if they don't go to the composition scheme. The GST has more or less stabilized, but still a lot of problems are there. If you compare the GST, indirect tax, with old central excise service tax with the GST, so you will find that in case of central excise and the GST, the department digitization was not there so acute. Basically, the GST started with more of a digitization. Now, in case of digitization, the department is having the entire database of each and every, most of the transactions. As you know that from B to B transactions, the entire invoice is being captured. You have the e-way bill, you have got e-invoice. Now the concept of e-invoice is there, that you have to raise the invoice from the system and upload it. So if you see the perspective of the government, the perspective of the government is that the entire transaction of the country should be on the system. If you just think about what GST is gaining with that, why ITC? If you see the amount of tax which has been, rate of tax, net tax rate of tax which is being collected through GST, it will go around to 3 to 4%. So a small question is why we are going for the ITC and why we are not just charging 3 to 4% and ending with all the dispute. So these are the thoughts which should come in our mind, because if you see the GST, the real problem is with the ITC. You are just struggling with the ITC. So the intention of the government is not only collecting the tax, but improving the trade. If you see the laws which have been framed in the GST, these laws basically aim that the trade practice should be smooth and it should be honest. Suppose if there is a one provision that if you don't make a payment to the supplier, you have to reverse the ITC. So the question being asked, why the department is concerned with this? The question is not about the GST only, because when government is framing laws combining everything. They are thinking the entire system of the trade, and that is how the taxation policy is being framed, not only for the collection of the tax, but again you see the taxation, the impact of GST is not only on the GST, it is on the income tax, it is on the corporate tax. All are connected. In fact, every data is being connected. And with the artificial intelligence, you will not believe it. You may not be knowing about your own suppliers, but department is knowing what is exactly happening in your trade. Yesterday, some person talked to me and said that I want to know about the supplier. and within 2 minutes I can tell him what is the status of his supplier, what is his quality. The department is grading each and every taxpayers. And just by seeing the grade, we know the quality of the taxpayers. So kindly try to understand that the GST collection is not only the GST collection. It is basically a smooth business transaction. Whatever the problem is there with the trade, those government wants to remove, even through taxation laws. So, when we talk about what is the future of the GST, the future of the GST is that basically, government intention is you should assess, it is a self-assessment. You should correctly assess it and make a payment, and department doesn't want to bother you. The government doesn't want to come to your doorstep. It should be completely through digitization. So even if you see the tribunal which is coming, it will be mostly the virtual hearing, it will be there. In the income tax, it is already there. So the interaction with the department and the trade, government wants to make the minimum interference with that. So GST should improve, the collection should improve. One of the more initiative which government has taken, at present a training is going on under the Karma Yogi. Under the Karma Yogi scheme, every officer is being well trained for 3 days to make ensure how to talk with their taxpayers. So attitudinal shift is being done in case of officers. So that the second thing is the thought process of the department is that it is a service industry. The tax collection is also a service industry. That government is providing a service for collection of the tax. So it's not something like policing type. Still, the policing has to be done. There is no alternative to that, because when you talk about the quality of the taxpayers, there are different type of taxpayers, good taxpayers. You will not believe it, that GST has become a business. If you calculate half of the taxpayers, they convert this into a business. Why business? It is sale and purchase of the invoice, which is being taking place. See, in case of GST, when the invoicing system comes, so when it comes to the customer, that invoice should end there. But it is not ending there, it is being sold. So it has become a business. So we want, the government is moving forward. When you talk about freezing of 3B, at present you can write anything, any value on the 3B and make any payment in the 3B. You can take any ITC. All these things will end in future. The lot of time is already given to stabilize to the trade, so that they can actually find out what is their actual tax liability, what is their actual ITC, they can fill actually. Otherwise, through system it will say, okay, this is your tax liability and this is your ITC. You will not have any option in this regard. So we have a very good future about the GST. It will be a more, you will not have much options, basically. The good taxpayers, they will feel, they will have a better life. The department, regarding those who are evading tax or doing some malefied intention, doing a lot of irregular things, it will be caught, because it is an age of artificial intelligence. Department is also using a lot of artificial intelligence to detect everything. Now thing is, they can detect for the entire country. You can imagine how much data is being handled by the department. So that's all. I just want to say that we have a very good future, and if we should have a much better relations, the taxpayers and the department should have a better tax relations, that you should not feel that we are not able to, we are facing such type of problems and department is not able to solve that. All those days have gone. Thank you.
Thank you, sir. And thank you for your kind and motivating words and all the taxpayers here, as you rightly said, they are mainly the large and medium scale enterprises who are very compliant with the law. And a very important point, sir, you said is this Karma Yogi training for attitudinal shift of the field officers who are interacting with trade. I remember, our now erstwhile Honorable Revenue Secretary's remarks where he said, don't kill the golden goose. So these taxpayers, they are generating the revenues for the country, and that is why GST is getting revenues. So since we are mainly the larger the taxpayers, one of the problems which large taxpayers have, and I know this is the way GST is modeled, but just to think out of the box little ahead in time, is, sir, this state-wise registration. The larger taxpayers, the same thing, like 2021 show cause notice, time barring has ended, and by and large, all the taxpayers, they have got minimum 25 show cause notices, by and large on the same issues from all the states. So this, can we have a system where there is a centralized assessment, sir?
See, why this so many registrations? So you know very well, it's basically a center or state issue. Center never wanted so many registrations. Center wanted a single registration for that. So as far as the federal structure is concerned, so I don't think we can do much thing. In the same structure, if we can find out a single solution. Now, as far as audit is concerned, see, assessment is not there. Large taxpayers, there is no assessment. It is a self-assessment. You are assessing yourself and filing the return. And be sure that in most of the large taxpayers, department hardly looks into it. Definitely, this is some arithmetical error, some technical error, some mismatch. These are being generated artificially, and we know that while you are filing the return, so this is the difference between your GST R1 and 3B. You were supposed to pay so much of tax and you have not paid. These are generated automatically, and you will find only such type of demand notice which are being given to you. The second issue is with regard to the audit. So as far as audit is concerned, again, it is done through state-wise. And if it is done in one state, it is not necessary in the other state it is being done. But department has already moved ahead with this, with a single audit for the entire country. And at present, for the banking and financial services, the department is doing single audit. So once it is successful, maybe after some time, for the big taxpayers, the single audit will be done. So all these problems of multiple audit will go away.
Thank you, sir, for that. We have a recommendation on this, sir. As you said that taxpayers, we already have recommended to the council in this regard. Sir, why not have a system where a taxpayer is, say, headquartered in Calcutta and he's working in 20 branches. Specifically the MSME taxpayers, sir. Today, any MSME company with 100 crore or 50 crore turnover, he can sell on an e-commerce platform. And he can sell in Calcutta, he can sell in 20 states. But the GST law requires him to take registration in all 20 states. If he does not go on a commission model, he goes on a principal to principal model. And that stock is recognized as his stock in each state. So why can't we have a system, sir, where he will have a principal place of business in, say, West Bengal, and an additional place of business in each of these states? Control will be there with the state government, but assessments will be done in West Bengal, sir.
See, I told you, it is basically a center and state problem. And neither state wants to lose the power. So the issue has to be taken up with the GST Council. The GST Council, all the state has to agree with this. So you can make a proposal that these are our proposal. With the same structure, we can do this. And then the GST Council can pass it, because nothing can be done here. Because the basic, if you just see what is the underlying principle here, that none of the state wants to lose the power. And if you have certain proposal that state does not lose the power and it can be implemented, so the issue should be brought up to us. We can forward to the GST Council, or you can directly take up with the GST Council.
Sure, sir. So we will write to your high office from the chamber to forward it to the council, because when we go to Delhi, we are told कि भाई आपने अपने चीफ कमिश्नर सर को बोलिए वो फॉरवर्ड करेंगे. So when we forward it to you, you forward to them. It carries more weight. So we'll certainly
forward with
you,
the
sir.
recommendation.
Yes, sir. That
So
will be
we'll
very
give
kind.
our own views there.
That will be very kind, sir. Another one issue is there, sir, regarding which maybe at a local level we can take up or council is this biometric registration, sir. Now again, for the same MSME, if he is taking registration, he still complies with the law, he wants to take registration. Now after this biometric, sir, this managing director or director who is sitting in Calcutta, he has to travel to 20 states. Every state he will give the same finger impression for biometric registrations.
I think this issue is already forwarded to GST Council.
Okay.
This issue was taken earlier also, and it was given to the Chief of Commissioner Office, and I think we have recommended with this, that the representatives should go there for the biometric, not the directors and the.
But can, sir, this biometric, like if it is happened, even if it happened 20 times for 20 states, everything happens centralized
It
in
can be
one
done.
state,
It's
sir.
not an.
It is a very.
It can be done. I don't think it is a big issue. It can be done.
Thank you, sir. So we'll also
You recommend that?
recommend that to
We'll
you.
do.
Sir, moving on now, like to the state related and our commissionerate related, some issues are there. One is, of course, that even high courts are very clear that for the same taxpayer, an investigating agency of the state or center and the jurisdictional officer of the center and state both can do for the same taxpayer an assessment and an investigation. Sir, but what we see is that even in the same state or in the same central jurisdiction, maybe say like DGGI, it will do an investigation, and for the same taxpayer, sometimes same issue, anti-evasion will also do a assessment. And it is like who comes first, who issues show cause first, finally it will go to that jurisdiction. So sir, here, in case you can throw some light.
So basically, I don't think anyone has faced such type of problem here. Whether any large taxpayer has faced such type of problem.
Yes, sir, we have one,
So,
sir.
if you have one, kindly come to us. We'll sort out your problem. See, the board has already issued the circular, the instruction in this regards. Instruction number you can see on the website also. 01/2324 GST investigation. That if there is a multiple agency who are doing the investigation, so how to deal with that? The entire power is already given to the commissioner, and he can talk to the other part, and it can be transferred. Who is willing to take up the case, it can be transferred. And it is not that it is not being transferred. I myself has transferred, I have got the case transferred. So only issue is you have to come to the commissioner, represent your case, and get it transferred. See, problem is not with the large taxpayers. Large taxpayers, your cases are mainly issue-based. And basically, it is discrepancy-based issues are there. So discrepancy, whosoever detect the discrepancy, then they can issue the notice. It's not a big problem. The problem comes with those small taxpayers or maybe medium type of taxpayers with turnover of less than 50 crores, but who are basically misusing their power. I can give you the example. Now, there is one taxpayer who has availed the ITC from ab initio cancelled tax suppliers. Now, the state government goes and issued the notice that the ITC should not be issued. They have not gone into the detailed investigation there. Then second time we send there, we find that it is basically they are dealing with the fake invoicing. So it is not a case of ab initio cancel, it is a case of fake invoicing. So more detailed investigation is required there. So all these, maybe thus all the investigating agencies are not dealing in the same manner, these issues. So thereby there is a multiple investigation is there. But if you want that a single agency, because the issue becomes different, the state government may not like to issue another show cause notice in that case. But the central government is seeing that it is a purely a case of fake invoicing. It is not a case of having ITC. See what happens if they are issuing a notice that you are availed the ITC from ab initio cancelled taxpayers for amount of suppose 10 crores, and he has dealt with 100 crores. This means he is certifying that 100 crore ITC was correct. Only 10 crore ITC is not correct. But actually, it is 100 crore ITC, it is a fake ITC. So, system of investigation becomes different, the target of the investigation becomes different. But these are, I don't think these type of cases are related to your category of trade, basically.
Certainly not last, but we have MSMEs also, sir, which are compliant. But say now, we had a MSME who had come to us, a hotel industry. They are now, there is we all know, sir, with the council also there is a case where in case a hotel charges more than 7,500 rupees for a room, then for the entire year, all his restaurant sales will be taxed not at 5%, but 18%. This issue is there with the council also. And here, of course, investigation has been initiated, which is okay. But again, investigation has been initiated by 2 agencies.
So definitely it will be transferred. Such type of issue is not a problem at all.
But does the taxpayer get a notice, sir, that your case has been transferred, or it is a internal
he will
process?
Definitely he will get a notice.
Okay.
He will intimate that your case is being transferred to other agency. And you can read the instruction number. This instruction is very clear.
So 12324.
12324 GST investigation.
Thank you, sir. Thank you so much for this. Sir, you spoke about ab initio cancellation, and we also spoke about biometric, which you kindly have said that it is with the council. Sir, after this biometric, will these 16(2)(c) problems where ab initio cancellation of registration is happening, after the biometric, and sir, you also said that already you are rating the taxpayers internally in the department. Do we see a fall in these cases where supplier is ab initio cancelled? Because all our taxpayer members are generally compliant, but vendor, his registration is cancelled. After this biometric, do we see a change in that?
Biometric is just a step forward. It is not a conclusive, foolproof system. Now, let me just add that all the large taxpayers, they should know their suppliers. There is a system of know your customer, so you should know your supplier also. If you are dealing with the brokers, especially in iron and steel and other sectors, I find that they are dealing with the brokers. And they are actually knowing their brokers, but they are not actually knowing the suppliers. Because your suppliers maybe, see what exactly is happening today, that the documents are coming from somewhere and the goods are coming from somewhere. This is a big problem, especially in case of scrap. And it is not limited to scrap. It has gone to other commodities also. I'm investigating so many commodities, maybe rubber industry, maybe lead, maybe textile also. So it is not the system of what they are doing it. As far as large taxpayers is concerned, they have received the goods, they have received the invoice. There is no problem to them. But the problem is one step back. The supplier who has supplied the goods to you, to whom you are not knowing, you are knowing only the broker. The supplier has received the document from somewhere and collected the goods from somewhere. And when we go in the chain process backward, we find that they are all the suppliers, the document who has supplied, all are ab initio cancelled. Their existence is not there. So finally what exactly becomes? The duty which has been paid for the goods which have been purchased by you, basically that it has been paid through ITC. And that ITC was itself was inadmissible. And as per the board circular, we have to raise the demand from you. So you becomes basically the victim. So what is the solution to that? The only solution is you should know your supplier. I don't know whether you are able to find out the numbering system of this grading of a supplier.
No, as of now, I don't think it is.
You can raise the
available.
demand with the GST Council.
This is a very.
That is already there.
I think that.
In fact, there was a proposal in the board itself, not only completely for the indirect tax, that every CHA will be graded, every importer shall be graded, and definitely in case of GST, it is being graded. Department is knowing the grading. So once, if you know the grading, you will stop purchasing it. And once you stop purchasing, the department problem will be solved out.
Thank you. I think this is a very good suggestion from your side, sir. I think there is a provision, section 149 of the GST law, where this grading system is there. But certainly, I mean, it will help all the customers.
So you should have a system of knowing your supplier, who is exactly supplying the goods, and whether he is genuine or not.
So at least for the big suppliers, you are suggesting that we should go to, at least an agency can go to their premises. Thoda photo वगैरह खींच के, at least we should keep it in our, the purchase department should keep it. I think this is a very good suggestion, sir. And this grading system to be made available to the taxpayers, this will certainly raise with the council from the chambers, sir. So, sir, one, many real estate and infrastructure companies are also here. And I think you are doing so many real estate assessments. You are the best person to tell us. Everybody in real estate is waiting a bated breath after this Supreme Court judgment in the case of Safari Retreat, sir. ITC मिलेगा कि नहीं मिलेगा, sir, 17(5)(d) में?
See, you have not, I don't know whether you have read correctly or not. As far as Safari judgment is concerned, they have just remanded to the High Court. And the issue is to find out whether the mall is a factory or not. See, in fact, in case of factory, so ITC was allowed. So there was no issue in case of factory. Only dispute is whether mall, and the Supreme Court has specifically said, I can read also, that each mall, in all cases, yani the judgment which is given for a particular case, it will not be applicable to another case. Let me just read it what the Safari judgment had said. So para 66, that writ petition are remanded to the High Court of Orissa for limited purpose of deciding whether in the fact of the case the shopping mall is a plant in terms of clause D of section 17(5). So if it is a plant, so definitely they will get it. But so much of it, all cases you will get it, not possible. I don't think department will definitely fight. The para 67, while deciding these issues, we cannot make any final adjudication on the question of whether construction of immovable property carried out by the petitioner in writ petition amounts to plant. and each case will have to be decided on its merit. This means whatever decision he is giving, the High Court will be giving for a particular case, it may not be applicable to another case. Applying the functionality test in terms of this judgment, the issue must be decided in appropriate proceeding in which adjudication can be made on the facts. The petitioner are free to adopt appropriate proceeding or raise the issue in appropriate proceeding. So I think basically the High Court has to decide whether the shopping mall is a plant or not. If it is a plant, they will get it. Because as per the law, for construction of plant, the ITC is admissible. This is how it has gone. Now, every shopping mall will be a plant, that is also an issue. So I don't think, in my view, it is my personal view, that this Safari judgment is beneficial to you. I have a doubt on that.
Sir, you have broken many hearts over here. That much I can tell you, because this was a general demand. But sir, just where it is a pure vanilla case, same like safari retreats, and Honorable Supreme Court, sir, has also distinguished Anand Theatres in the same judgment, which was for hotels. So Honorable Supreme Court has distinguished Anand Theatres and say, okay, that is theatres and hotels. This is malls and warehouses. If the mall is a plant and it is used for generating revenue, for renting out, and initially also it was built for the purpose of renting out only, then as per functionality test, the ITC should be granted. So would the department do this functionality test, sir? Or
See, how the mind of the department goes. So it's a simple interpretation that whatever the raw materials are being used, these are being used for the manufacture of the property, and that is immovable property. And there is no basically GST on the immovable property. So there is a break in the chain. And that is why department says ki first the immovable property has come. Now the immovable property is being used for other purpose, like renting purpose, maybe for other purpose. So this means you have not paid the GST on the immovable property because it is not payable. And that is why you are not going to get the ITC. This is the basic logic of the department. Now, the court has to give the judgment as per the law. The only break in the law is it is the plant, the definition of plant. In case of plant in the ITC is admissible. So let us wait for the judgment of the court in this case, how the plant is being interpreted. Only after that we can take a call on that.
and we see or and replaced, sir? In 17.5D, the entire mischief was done by or and. So maybe in this budget, would the government go? Okay. That we leave it to the government council, sir. Sir, a recent development which all taxpayers here are impacted, sir, where we require your suggestion also, I would say, is this new provision whereby for RCM under 13(3)(c), from the date of rendering the service, within 30 days, a taxpayer has to generate a self-invoice, pay the tax under RCM and take the credit. Now, sir, the biggest issue over here is, say, for example, transporter. We have an unregistered transporter. We as a service recipient are paying on RCM. Within 30 days, even from the date of the invoice, if I am asked to calculate 30 days, pay tax on RCM, generate a self-invoice, that is okay. But the clause 13(3) says, within 30 days from the date of rendering of the service. So maybe transporter has delivered the goods, 15 days ahead. After 15 days, he makes the invoice. I don't know that day, sir. So how do we overcome this?
So I think you should give the representation in this for change. Because within 30 days of date of rendering service, it is impossible to find out the rendering of service date. So it should be changed basically. So you can give the representation.
Thank you, sir. So certainly we'll represent from the chamber on this. Do we represent कि sir 60 days तो ठीक ही था.
आपको जो represent करना कर दीजिए वो.
Thank you.
We'll just recommend.
Thank you very much for this. Okay, sir. New, we since from 1st of January, I think new forms will be coming for amnesty scheme, the GST amnesty scheme. So we would request your views. I think all taxpayers here, they will have got some cases which can go under the amnesty scheme. So just your views on the approach, because generally we see विवाद से विश्वास स्कीम आता है, उसके बाद उसमें भी विवाद हो जाता है सर. So how to get out of this विवाद? We want only विश्वास, no विवाद, sir.
See, I think the 128A के जो प्रोविजंस हैं और जो सर्कुलर जो निकाला है, सो दैट इज़ वेरी क्लियर. सो फाइंड आउट योर कैटेगरी एंड आप उसको पेमेंट, बेसिकली गवर्नमेंट वांट्स पेमेंट, सो आप पेमेंट एडवांस में कर दीजिए. सो एक बार पेमेंट आप ड्यू डेट के पहले सब कर दिए हैं और अपनी कैटेगरी देख ली, और फिर भी आपको इफ़ एनी प्रॉब्लम, यू फील एनी प्रॉब्लम, सो टुडे ऑल्सो यू कैन कम टू अस. We will just sort out your problem. We can give the, because everyone will be having a typical problem, a specific problem. So instead of pointing out the problem at the end, you point out the problem in the beginning itself, so that all the problem will be solved before due date. I don't think there is much problem in this case.
Yeah. So rightly so, sir. So do we have a nodal officer at the state, at the local level for this scheme, or each jurisdictional officer?
We will having, because once it is implemented, the due date is still
31st of January is the payment
yeah.
date.
So we will be implementing this, and nodal officer will be there, but still you can basically, you can approach to the commissioner by writing letter, or normally in case of center, the nodal officer will be assistant commissioner technical.
Okay.
It is the general way. Only the AC technical deals with all such type of cases. So you can approach them.
Okay. Thank
Or
you.
additional commissioner technical. If any bigger problem is there, you can come to the commissioner.
Okay. Thank you, sir. So once these forms come out, maybe we have more problems.
Yeah.
Only thing was that we represented before the council, it should be an issue-based thing. Ek
That,
show cause
that
mein, but
clarification is not
was-
there.
Yeah, that is not clarified. So I am sure it is now show cause or order-based rather than issue-based. Right. Sir, now talking about the local level, and of course, since you are in Calcutta, you can talk about Calcutta, but since you are a central, commissioner, this registration also, sir, the law requires 21 days to be given to the officer for registration. But can it be done earlier, sir? I mean, how can we represent or solve this where maybe 7 days registration is done?
I think registration is done immediately. Only in big problem cases, what is the system? You must be aware what is the system of registration. Once you apply online, the system itself allocate either to the state or to the center. It is basically one by one basis. So one goes to the center, other goes to the state. Then there is a central processing cell in the registration is monitored centrally for the entire West Bengal by the center also. So it goes to the central processing unit where they basically check it. The 90% cases, immediately it is given clearance and immediately there is a registration. So because there is no human interference in that case. Only where there is a doubt. Why there is a doubt? The first doubt is, see, we are conducting more than, in North itself, I am conducting more than 50 to 60 search per month. And if you multiply by 6 commissioners, so it comes out to be, on an average, 200, maybe 200 searches. Your 90% cases are related to, not 90, even more than that, 95% cases are related to the fake invoicing. And more than half of the cases, the existence of the premises is not there. 1 month before, there was a second fake drive, which was done centrally throughout India. And the statistics shows, I think, more than 2,000 taxpayers were selected for the verification. It is just a verification of the premises. And it was found that more than 100 premises are not available there. So the bigger task is, and that is why the biometric had come, to find out, at least we can find out somebody who is taking the registration. The basic problem, see, if you are a big company, no one is going to stop you. It will immediately, it is within a day the registration is granted. So there is no issue to that. The issue is problem to the smaller taxpayers. They are taking the registration in the name of the poor people. Those who are drivers, those are the workers, In their name, they are basically taking the registration. So even those who have died, in their name the registration is being taken. So, and the place which they are declaring, it is not in existence. So just see, what is a big task that our people has to go to each place, find out that in selected cases, not in all cases, where there is a doubt, and find out whether there is an existence of place or not, whether person exists or not, and that is why the biometric system has come. So, as far as registration is concerned, if in genuine case, even there is a delay of 1 day, you can brought to our notice. I don't think there is a delay of more than a single day.
Sir, you rightly said, of course, you know, these kind of fake registrations, they are condemned in the harshest of voices, and strict action should be taken against them. But there is a concept, sir, you know, where it is widely discussed now in the new era businesses of virtual place of business, where, as I said, a person can have a registration in, you know, maybe it is a company who has a head office at Hyderabad, and which just has a sale point over here. So they take a business center, you know, in a business center, 100 small desks are there. They are registered there. There is a laptop which has some data. Main data is in the SAP in Hyderabad. So there, when the officers go, they think that it is a fake, but actually it is just a sales office.
See, we can bust just by seeing the name and their data, we can find out whether what type of business they are doing it. Basically, those who are actually doing the business. See, what is our problem? We try to find out the existence of the premises which they have declared. At least when we go there, we find out who is the owner of the premises. We find that they said that this company does not exist there. So in genuine cases, this problem will not arise. The moment someone comes there and say that, this is our business model, we are actually doing the business. We need not to keep a big premises. We agree to that. So there is no problem to such things. Now imagine, in case of iron and steel, the person is having a 10 by 10 and his turnover and his stock is more than 3,000 metric ton and no premises. And he is not doing bill to ship invoicing also. If there is a bill to ship invoicing, so we can accept that. The government accept all model of business. There is no problem to that. But those things should be brought to the notice.
So, like I'll tell you on this, just, you know, continuing with the same example for these MSMEs who now are doing businesses across the country. Say an MSME is registered on, just example I am taking, it can be any, so it is registered on Flipkart. So he will have his office here, he will sell in Bangalore also, Delhi also, and Mumbai also. But in each of these premises, he will just have because he is mandated to take a registration in the state, he will take a business center, workspace. Actually, he will hire, say, a cost accountant, chartered accountant, who will take care of his monthly returns and all. But that CA will not be sitting in that premise, he will be moving around. So when the office, specifically, this is the problem from the state government, sir. They will go there and they will feel, while this MSME dealer, he is a reasonable guy, they will say, no, how do we think that it is not fake? You have nobody over here.
See, how to find out the fake? Basically, your invoice tells whether you are fake or not. Because whatever business you are doing it, there is no need that you should store the goods at your premises. You can purchase the goods and sell the goods directly to somebody. This is what exactly is happening. But your invoicing should be like that. Your business premises is at this place, so you are writing the billing address. Then the goods are taken from particular premises. That premises should be written in the invoice. The goods are collected from this premises and dispatched to this premises. There is no problem to that. We understand that such type of business model is there. But if your invoices does not speak all these things, then what government is going to understand? So you have to correct your invoice also. Invoicing, whatever exactly whatever correct thing is happening, you write on the invoice. The department will accept that.
Right. So, thank you, sir. I think you have clarified many doubts which many taxpayers had, but we have, some questions from the audience also. We can take, I saw one hand over there. Yeah, if you can please ask your question. Can somebody give a mic over there, please? Kindly introduce yourself and you can be brief on your questions.
Good morning. Good morning, sir. I'm CA Rajiv Harlalka. Basically, we are helping e-commerce sellers in West Bengal. So, अभी जो context में हम लोग का बात हो रहा था कि भाई CPC है and registration होता है, process है.
Can you be a little louder?
Hello. So, multiple registrations in the same premises को लेके issue है, and we went to CPC Central as well. वहाँ पर वो clarity नहीं है कि they are telling कि we are not having clear message कि we can give, and they always doubt those registrations. Although these are small MSME sellers and they never have any history of any fraud or any of such fake invoicing. So can you please address this?
Take up this issue to the Chief Commissioner.
अच्छा.
क्योंकि मुझे नहीं लगता कि अभी this issue was taken up with the central.
Okay.
I don't know with the state. I think with the state you have taken up.
No.
The state has given certain solution.
Yes sir, state में कोई issue नहीं आ रहा है, central में issue आ रहा है, तो अगर वो
हाँ तो आप एक बार center में representation दे दीजिए. So
अच्छा.
whatever the model state has followed, the same model center will also follow.
because these sellers are coming pan India and they are state में अगर आके West Bengal में नहीं होता है registration, so that is an issue. So registration is a big problem जिसके कारण sellers are facing.
That I think because I understand that the state has solved this problem.
हाँ, सेंट्रल में इशू आ रहा है, बट वहाँ पर ऑफिसर्स बोल रहे हैं हम लोग के पास क्लियर
आप ये
गाइडलाइंस नहीं है.
थ्रू BCC&I जो है,
अच्छा,
बिहार बंगाल चैम्बर ऑफ कॉमर्स, आप रिप्रेजेंटेशन दे दीजिए और उसमें लिख दीजिए कि व्हाट द स्टेट इज फॉलोइंग द सिस्टम. So I think Chief Commissioner will give the direction.
Okay, sir.
Kindly, if you can forward your representation to Sharvani or Shomana, we'll include that.
Sure. Thank you so much, sir.
Thank you. Yeah. At the back, Shomik.
Good morning, sir. I am Shomik. I am representing Larsen & Toubro Limited. Sir, we thank you for an insightful session. But regarding these multiple demands, what were discussed, sir, we are still facing issues from DGGI as well as the local authorities who are taking the assessment for specific issues. So if that can be addressed from your end to the DGGI, that will be helpful for us. Because in our all 32 registrations, we had certain audits are going on where certain issues are being raised. We are litigating that. And parallelly, DGGI is also taking up the same issue. So it would be helpful, sir.
It is local DGGI or?
It is located in Delhi.
Delhi.
But initiation has been done from
So where you
Ahmedabad.
are registered here in Bengal? Which
We are
commissioner?
registered in state.
State.
Yes.
So आप वहाँ पर जाके you give the representation, they will forward it.
So we have given, they are telling you taking up with the DGGI. So that is happening, sir.
आप ले आइए, मेरे पास ले आइए, मैं बात कर दूँगा DGI से.
Sure.
Yeah. We'll come to you.
Good morning, sir. This is myself, Manoj Ruj. This is my suggestions only. This is with the amendment of section 16.4, when the due date has been extended for availing the input tax credit till the 30th November.
Kindly be a little more louder.
Hello?
Yeah.
Okay. Am I audible, sir?
Yeah.
So with the amendment of the section 16.4 and the due date of the availing input tax credit as extended to 30th November. Okay. Now earlier it was September. So SSC was ideally get the 2 months or 3 months time to filing the GST 9 and 9C. With the amendment of 30th November, now we are getting ideally 1 month's time to filing the G9 and 9C. When the entire world is preparing to celebrate for the welcoming the new year, when we are the fellow members who are in the indirect taxation field, we are filing. So my only suggestions through you to the GST Council and our Honorable Finance Minister to give us the fair time and extend the suitability so that we can file the GST 9 and 9C.
You want 9C date extended
Yes.
or ITC date
No,
back
no,
to
9C,
30th September?
9C. 9C.
You don't want that also to go back.
That is my
See,
suggestion
these are
only.
See, sir is allowing you to celebrate New Year.
No,
you
sir.
file 9C by
Sir is-
31st December.
Sir is allowing, thanks for this one, but the due date is not allowing us to celebrate all these sorts of
No,
things.
no. I mean, of course, yeah, your sentiments are there, sir, but if in case you want to say something.
Thank you, sir.
नहीं तो इसको आप एडवांस में क्यों नहीं कर देते हैं? Why you are delaying up to
Sir,
this?
if we try to advance, only we took this our turnover reconciliation finalized. But in whatever
देखिए
the
आप
input tax
आप
credit-
imagine कीजिए, you are dealing with a single company, the department.
No, sir, we have the multiple states operations.
Okay,
ठीक है,
let us,
with a
let
single
us, you have
company.
asked,
The
yeah.
department is checking everything. आप इतने पूरे स्टेट का, पूरे इंडिया का इतने लिमिटेड ऑफिसर करते हैं. So kindly do it. जैसे ही आपका 31st मार्च चला गया, you take 2-3 months and complete the task.
No, sir, how it is possible, sir? Because
Okay,
the
see,
input
these are
tax credit is extended
these are
to 30th
practical.
November.
No, just these are practical, issues relating to the ground level. I think we should raise your major issue is, maybe you should require more time for 99C, right?
I think you
Earlier
should
that
require
sir has
less time
replied.
now. आपका सारा कंप्यूटराइज सिस्टम आ गया है. आज आपके सिस्टम ऐसे होने चाहिए कि 31st समाप्त हुआ, एवरीथिंग इज रेडी. इट इज एवरीथिंग इज कंप्यूटराइज, आर्टिफिशियल इंटेलिजेंस आ गया है. आप अभी भी अगर आप इतना समय लेंगे, सो हाउ फास्ट यू आर गोइंग टू मूव फॉरवर्ड?
Actually, sir, unka, his pain point is a little different maybe. This 9, GSTR 9, Arunji is here, he is smiling away, and we would request Arunji also to take up from GST network. Now, sir, there are two laws. One is the GST law and one is the GST network law. So the GST network has changed the 9s over here, sir. 8D will become negative, and everybody is
Exactly.
confused on that. So that
8D
call
and 8C.
everybody is taking.
There is also confusion on 8D and 8C also.
Yeah. So that is, that is,
There is no confusion.
But this is my only sincere suggestions through you too, sir. If you consider, if it defeats the...
ये है कि आप एकदम पहले कर लीजिए, आप टेंशन फ्री रहेंगे.
okay. Next, yeah, somebody over there. Yeah, please.
Yeah, morning, sir. My name is Kunal Jain. I am from Imami Limited. So my question is regarding that in cases where we have a GST accumulation, in case we take the RCM services, we have to make upfront payment of the cash and then have to take the ITC credit. So why not allow the cash payments instead of cash payment? The credit should be allowed from the credit ledger and then we can take the RCM credit because it's affecting the cash flow. Ultimately, we will get the credit but don't know in how many times of tenure. So basically, it's regarding the ITC accumulation.
I don't think government will accept to that. It's a long story, so let us not.
That we have to still live with that with the pay.
Yeah, you have to live.
Because the
with that.
management will keep asking to pay in cash and then take the credits.
Yeah.
So we can't do anything on that.
At least government is getting some tax amount, more tax
Cash,
amount.
in cash.
Otherwise, see, everyone says that we are paying tax, and my 95% taxpayers are paying only through ITC. So how can I say that they are paying tax? Can you imagine? This means 95% taxpayers, they are basically doing no business, means no value addition. So how it is feasible?
I
So-
understood, sir, that we have to make the cash payments to run the government machineries also. Else we are taking the ITC
I mean,
credits.
yeah, that of course.
That can be the
uh,
point. My
I
second
think we
point,
have suggested this from the chamber, but as sir has said, that
Government is not
it
going
is a
to
long
accept.
story.
So,
Yeah,
if I can ask one more question. May I allow?
very quickly, very
No,
quickly.
it's just a
Yeah.
clarification. So we generally have to pay the, in case of imports, we have to pay the RCM, freight on RCM. In case of CIF contracts. So in case of FOB, so there is a various judicial pronouncements. So in case of Supreme Court, Mohit Minerals have allowed that in case of CIF, you don't pay RCM on freights. But on FOB basis, there are various judicial high court decisions. So we need a clarification from the GST department whether this is, whether we have to pay the RCM on freight or not in case of FOB contracts.
I think a lot of decision has come here.
So there is a such high court decisions, various contradictory
Bombay High-
decisions. So there is no clarity on that except for Mohit Mineral, which is just on CIF basis.
I think we'll reframe.
See, in case of import, even if it is FOB value, the CIF is being calculated and you are paying duty on that. So your freight is already included there. You are paying GST on that.
Yes, so that's the question, sir. In case
then
of
why you should pay again?
that there is no clarification on it. So still there is a
No,
debate.
but we are not raising demand. I don't think department is raising any demand.
So clarification would be helpful for the taxpayer. I think then we have
For
to take
West
the conscious
Bengal,
call.
sir has clarified, sir will not raise a demand. You know, for other states, maybe we have to go to the council.
See, it is a logical thing. The custom duty is being charged on CIF value. Your charge may be CIF based, your invoice may be CIF based or FOB based. But as far as custom duty is concerned, they will calculate the duty on CIF value, where your freight amount shall be included and the IGST shall be paid by you there. So why you should pay again?
Still don't want to get into litigation, so generally prefer to pay on
I
RCM
think
basis and take
earlier
credit.
demands were raised because I was there in Mumbai. I know that demand were raised. After that, it was stopped.
And department is not contesting this Bombay High Court ruling. So I
Okay.
think issue is res integra.
Thank you.
We'll take two more questions. I think one over there, one over here. There are many hands, but in the interest of time, we'll take two more.
Okay.
Yeah.
Sir, my name is Prabhas Kumar Roy. I am from Primetals Technology India Private Limited. So we wanted one clarification about transaction. That is, we are procuring goods from Delhi, and in an invoice, the ship to address is Maharashtra, and bill to address is West Bengal. Now, subsequently, that goods we are exporting out of India, and in that case, we are raising export invoice from West Bengal. So, is this transaction is okay in respect to invoicing?
Basically, you are registered in West Bengal.
We are also registered in Maharashtra,
Okay.
and that is a warehouse actually.
Hmm. So, you are basically raising the goods are
Goods are moved from Delhi to Maharashtra,
Maharashtra.
and billing address is in West Bengal.
Hmm.
And subsequently, the goods are taken outside India as export from Mumbai warehouse. And that export invoice we are creating from West Bengal.
I don't think there is any problem with that.
Okay,
It's
sir. Thank you.
Yeah. Last. Can please mic dijiye.
Sir, my name is Anshu Dalmia from Steel Authority of India Limited. I have a similar question which from that gentleman from Imami raised, that we are still giving tax on the basis of RCM on import of goods on FOB basis. So I will request Vivek ji just to include this concern and get a clarification on this, because we are paying almost 30 crores rupees per month on RCM. So that is a big
RCM
concern.
on freight.
Yes, sir.
FOB. No, please, if you can send a
Yes.
representation to Shorbani
Yes, yes.
or Shumona,
Yeah,
we'll
definitely.
include this. Yeah. So I think, sir, do we have another 5 minutes or? Okay. So there was one hand over here, 1, 2, and here 3. 3. Yeah.
Sir, we have a similar issue relating to accumulation of ITC. When GST had come, IST was not very common. People used to take a single IST registration, and they had many back offices in many states of the country. So there is a problem of accumulation of credit in those states, because those states were all acting as back offices and without having any output service, because those states, people at those states were only helping in assisting of the projects taken in those states. And the main services was being provided from one major state or the head office whatsoever. So there is a problem for accumulation of credit in those states. So if only the IGST portion and CGST portion can be transferred to any other GSTN, if a proposal can be made in this.
See, when there is a transfer, so let us understand there are two ways. One is cross charge and second is the ISD. So let us understand what is cross charge and what is ISD. At present, in case of cross charge, you may not pay tax from one branch to another branch. Cross charge is when one of head office or one office is providing service to another office. Then it is something like head office is there. They are controlling all administrative things, and basically this administration is required for your other branches. So we actually calculate how much is the service you are providing to another. So you can basically then raise the invoice, make a payment. Basically, you make a payment, the other will take the credit. So that is cross charge. The concept of cross charge has almost gone because you can make the value 0 as per the board circular. Earlier this problem was there, a lot of so-cause notice were issued. Now there is no so-cause notice in case of cross charge. The other is ISD. What is ISD? ISD is basically you are receiving the service from a third party. Third party means from outside party, and this service is being used in all other states. Then what you can do, depending upon their turnover, you can basically, whatever credit you have taken, you can bifurcate, divert the fund, the ITC, from one place to another place. That is the only way. In addition to these two, if you are doing anything extra, that is wrong. There is no concept of transfer of ITC from one branch to another branch. There is no concept of that.
So not talking about transferring the credit illegitimately. If the board can allow transfer of CGST and IGST credit which is accumulated at one state, because that state was being used as a back office, and there was no IGST.
You can transfer only under these two situations. If your credit relate under these two situations. Under third situation, you cannot transfer. If there is an accumulation at one state, it will lapse there. You cannot transfer. If you are transferring it, you will get a demand notice.
Correct.
During the audit. Okay? Only these are the two situations. The first situation is cross charge, providing service from one branch to another branch. You can transfer it. And that you can create, depending upon your requirement, you can create, as per the document. The second thing is you are receiving the service from outside, like you have purchased some software, it is being used throughout country. So definitely depending upon the turnover, you divert the fund or transfer the fund, depending on the turnover as per the formula. Third situation is not there for transfer.
So will it not look very odd that a person is having a regular GST in one state and many IST in other states, like 10 IST in 10 states and a regular GST in one state?
No, there cannot be 10 ISD in one. See, ISD means where basically the service, normally ISD is being taken by the, where the head office is there.
Right.
Because the head office is normally procuring the services for all their branch. So generally, in most of the cases, there is a single ISD where the head office is there.
So and for back offices?
See, for the back office, why ISD is required? Whether they are procuring the services from third party for all other states?
They can be having rent expenses, they can be having software expenses.
Then rent expenses is related to their own, that state only. That expense is not related to third.
So cross charge and ISD.
If you require further discussion, you can come to me.
Thank you, sir. Thank you.
Sir, yeah. Yeah.
Hello, sir. This is Tehseen. And my question is for the online mode of selling. It's like for sellers like us, we have our head office here in Kolkata, and to keep our goods closer to the customers, we have to keep taking registrations in multiple states. And for that, the biometric thing that we discussed, and then the physical representation of the owner itself in all of these states while the registration is happening. And even after that, when a sudden verification process happens at the PPOB location, but the goods that we keep it at the Amazon or Flipkart warehouses. So it gets very difficult for us to manage this when we are registered like this in 10 or 12 states. So is there any way to make this simpler for online sellers like us?
This issue is already discussed.
Yeah.
They are giving, the state has already implemented. So the same thing they will represent to the center and will take care.
Okay.
You can write to us. You know, we discussed this with sir,
Yes.
and we'll write to the center to the council on this.
Thank you.
To the council, it is not required. They will take.
To the center, but that is for West Bengal, no sir. But बाकी states में
सर कभी-कभी ऐसा होता है हमें बहुत स्ट्रगल करना पड़ता है अदर स्टेट्स में उनको समझाने के लिए कि ये बिजनेस मॉडल है तो
same that I think आप CBIC को refer कर दें so they can basically
We'll
issue the
write to
same.
you, sir, for referring to CBIC. Yeah, last. Yes, sir. Okay, two more. Ma'am, since you have the mic, you can say, and
Hello.
after that, we'll come to you.
Yes, this is Sudipta.
After her, we'll come to you. Yeah, please carry on. Please carry on.
Under the amnesty scheme, we can also make the payment for RCM. If we are not having, major output liability in that GSTN, can there be any, possibility of transferring that whatever is discharged under amnesty scheme for RCM?
I could not get.
No, yeah, you have to be a little more
Under
clear.
the amnesty scheme,
Uh-huh.
we want to, close a litigation which is related to RCM payment. But right now, we have multiple GSTN, but we are not having any output liability in the GSTN for which we want to make the payment under RCM.
But you have ITC.
Yes, under amnesty scheme, I want to make the payment and I should be eligible, the ITC should be eligible to me.
No,
So
the
can
dispute is with regard to the RCM.
Yes,
The RCM has to be paid in cash only.
correct. That we are okay with, but then we have closed operation majorly in that GSTN. So can there be anything in the amnesty scheme where if you are because the time to which the litigation relates, that time outward liability has been paid in cash or with ITC. Related to that, I have one litigation.
So she is saying that cash which was paid earlier, that adjusted against RCM, and now ITC be adjusted against that.
No, that is
No.
Is it
then,
that?
No. If I am making a payment today under RCM, that should be eligible ITC to me.
No, but in amnesty scheme, I don't think whatever you pay in amnesty scheme, no ITC is available.
Is
Gone,
there any
that-
clarification on the RCM part? There is no clarification.
So basically, you are saying your dispute is with regard to the RCM.
Yes.
You will make a payment whether ITC will be eligible or not. Is this
Yeah,
the
first
question?
No,
I-
under amnesty scheme, I don't think any
I think
ITC
you
is
write to
available.
us. We will clarify it. There is, you may get it. I don't assure you, but
Great.
Thank you,
So
sir.
you have raised some, sir has raised some hopes. If you can write to us, we can raise it to.
we'll examine that.
Thank you, sir.
Yeah, last question, sir.
Good morning, sir. For availing ITC through GST or 2B, it is mandatory that invoice and debit note must be uploaded in the system by the suppliers. Is it also mandatory that bill of entry is to be uploaded? Because section 16 and rule 36 specifically talks about invoices and debit notes. They're totally silent about bill of entry.
Bill of entry is being uploaded directly by the system itself.
No, at times there is a mismatch, gap.
No, you don't have to, I don't think you have to upload it because the database of the bill of entry is already there.
It is
and
normally
it is being
uploaded by
uploaded.
IceGate.
The IceGate and the GST is integrated.
At times it is missed out.
It missed out, so we are considering those cases, I think.
No,
But
there
we
are
have
many
control.
demands, sir, many demands across.
But most of the demand are being dropped once you go to the adjudicating authority and you show the bill of entry.
Adjudicating authority, with all due respect, at the state level, it is a farce. I'm sorry to say, sir.
At the state level?
Yes. Anyway,
See,
let us-
I think you can bring this to the notice of the chamber. They
Sure.
can, circular can be issued in this regard.
Another
We have already represented on this, sir, that for this bill of entry, there is a system glitch due to which it does not reflect in the 2B. So how can a system be made?
See, basically, as far as Centra is concerned, they are not confirming demand if you have copy of bill of entry,
I know that.
even if it is not reflected in the system. Because we understand that in the system it is automatically uploaded, and if it is not uploaded, we can see and you have the bill of entry, we can verify also your payment.
Okay.
So it is allowed normally.
And the small suggestion or request, sir, in view of the introduction of IMS, invoice management system, it will take some time to check whether my supplier have yes or no or pending, etc. Can the date of payment, that is filing of 3B, be extended by a couple of 3-4 days, say by 25th of the following
I have
month?
not gone through this management system. Let me go through. You can bring this to our notice. I cannot comment on that.
Yeah, we have from GST network also horse's mouth directly. So please wait for the next few sessions. You'll get your answer.
Okay. Thank you.
Right. So thank you very much, sir, for the extensive deliberations. I think we are already running out of time. So you can park it. Maybe after this session you can ask, sir. Sir, you have clarified, innumerable issues of the trade, some of which maybe, which we didn't or we were not aware of, like this grading system of the suppliers, which is a pain point of the industry. So thank you very much for this wonderful session, sir, and taking out time for the chamber.
Thank you, sir. I request our chairperson to please present a memento to KDS sir on behalf of the Bengal Chamber.
Thank you.
We will take 2 minutes for changeover. We will now proceed towards the technical sessions. So we will have an interesting session now by Mr. Arun Chhajar, Senior Manager from Goods and Service Tax Network.
Shall I start? So, good afternoon to all of you. So, first we will start some concept of new return system. What is the new things is came in the GST portal, and then we'll gradually move to the IMS, and then if time at the end we will discuss the whatever your question you have. First of all, I would like to give sincere thanks for providing me the opportunity to the Bengal Chamber of Commerce to discuss my view or my thought and to share among the industry and trade. So, you all know about the invoice management system. Mostly it has been more than 1 month regarding the invoice management system. Whatever the document comes, the recipient has to accept or reject or keep pending. Or if it does not take any action, then it will be deemed accepted. The action can be taken on the real-time basis. Matlab it's exactly replica. When the supplier save the record, it will available in the IMS. You can take the action, accept, reject, keep pending, whatever. 14th of the following month, system will generate the draft GSTR to be based on the action that you have already taken. That action would be available till you file your 3B. See, it means if you are not filing the 3B, you can change the action from accept, reject, whatever. The latest action will be considered for the computing the GSTR 2B. You have to again recompute your 2B. So to that extent, we can say the GSTR 2B is now not the static document. It will be the static on the 14th of subsequent month, but yes, it will not be static because you can change the action and recompute your GSTR 2B. Currently, the document which are going through, see the point number 1, the IMS is only for the GSTR 2B for the time being. Only for the GSTR 2B for the time being. Means, for example, I am ISD distributor. My inward supply coming in which return? My inward supply is coming in which statement or document or return, whatever. The form GSTR 6 capital A. That will not be controlled or managed by the IMS as of now. It means the document which are appearing in the 2B, only to that extent there will be the IMS. However, there are certain documents which are coming in the 2B, but as of now it is not coming in IMS. We'll discuss that. So it means GSTR 6A, it will not have been any linkage or any control with the IMS. Either the supplier file the GSTR 1 or file 1A or IFF. All these documents will be available to the recipient on real-time basis. He can take the action. But certain documents are also coming in the 2B, like first import of the goods, which are flowing from ICE gate. That will not be, as of now, that will not be through IMS. Obviously, yes, it is in the pipeline. Take some time, but yes, it will be routed through IMS. Similarly, GSTR 5. all the document which has been uploaded by the GST in the GSTR5 will also come in IMS. As of now, it is directly coming to 2B, but yes, in future it will come. Regarding the ISD, lot of representation has been received, because ISD is nothing but my baby. So I have one office, another office. Why it should be controlled through IMS? So based on the request, and in the 21st, on the 21st, we have the GST Council meeting. Based on that decision, probably it appears that ISD will no more in the IMS system. Again, certain more documents are not in the IMS, like I am registered taxpayer, advocate, and I am making the supply to you. I will file my GSTR1. I will report in the GSTR1 table 4B. It will appear in the 2B. It will not be managed through IMS. It will directly hit in your 2B. Inward RCM, no. It will not be controlled or not be routed through IMS. And prima facie, as of now, I feel that there is no such discussion, or if trade feel that nahi, it should also be in the IMS, I request Bengal Chamber of Commerce that they can represent easily that RCM supply should also be routed through IMS. Okay. So, because both voices are there, sir. I can say both voices are there. The people are saying, think about when the 3B will be logged. Think about when the 3B would be logged, and if I have erroneously reported some outward RCM by taking that checkbox, will it not create your liability? Answer is yes. And if it is logged, then what happened? So therefore, if the trade feels, then ideally you should represent the matter through any trade association. You cannot take certain action on certain document. For example, pending option is not available on 4 category of the document. The nature of the 4 category are same. Nature of the 4 category are same. The document are such in which supplier has reduced the liability and the recipient should reduce the ITC. These 4 documents will not have the pending action. The perfect, first, all we know that credit note. Second, upward amendment of credit note. Third, downward amendment of credit note. But the downward amendment of credit note, will it be the ITC document or will it be the reversal document? Normally it will be the ITC document, but in one case it will be the reversal document when अगर उसका original credit note वो recipient ने reverse किया, then this downward amendment of credit note will also be the reversal document. Therefore, the pending option is not available. And the fourth, invoice, if I am issuing the invoice, you will take the input tax credit. Whereas, if I will increase the amount by way of the amendment, you will again take the differential delta ITC. But if I will decrease the amount of tax invoice or the debit note, it will not having the pending action because you need to reduce the ITC. So the 4 document will not have the pending action. But since launch of the IMS from 1 October, the day when the advisory was uploaded on the portal, till date, all the association are demanding that at least provide some time limit for the credit note because it will need some time to reconcile. So again, the matter based on the association, the matter has been submitted to the policy wing. Probably in the GST Council meeting on the 21st, there we may expect from some favorable decision. Yes, if any decision will be come out, we are only the implementation in the portal. But yes, as of now, there is no pending action on the credit note or these 4 documents. But yes, जब भी 21st को meeting होगी, based on the discussion, based on the decision, yes, again, there may be some changes in the credit note. Credit note also have some more problem based on, I am sharing my experience based on your representation only. The perfect example, अगर credit note 17.5 का issue किया तो क्या? It means when I have issued the invoice, you have already reversed the ITC. अगर मैंने आपको इनवॉइस इशू किया, लेट्स से 17/5 का मोटर कार का इशू किया, फूड एंड बेवरेजेस का इशू किया, you might have taken the ITC and already reversed the ITC. Because of any reason, subsequent period, I am issuing the credit note. What you will do, the credit note, you can't accept, because if you will accept, it will reduce the ITC. And you can't reject. Ideally, you can't reject. So you will be in the dilemma कि accept तो करना है पर मैं जानबूझकर नहीं कर सकता. The problem is insurance company. The biggest problem. आज we are providing the, suppose insurance company are providing the health insurance, on every plus minus of employee they are issuing the credit note. System already issue the credit note, but हम तो insurance का credit तो directly हम reverse में डाल देते हैं. We are adding the same in the 4A5 and reversing in the 4B1 of the GSTR 3B. तो nut cell में तो मैंने ITC लिया ही नहीं. अब उस credit note का क्या करूं? No solution for the time being. But yes, similar amount of the trade request has been received on this particular part also. On the regarding the credit note, I can say in entire IMS system, if I talk about the representation of the trade, the majority representation are talking about the problems of credit note. Is it because of 17/5 or because of any rule 42-43 or because of pending action not available? So based on the decision of this council meeting, you may seen some favorable, if they give the decision in favor, then obviously it will be implemented in the portal down the line. IMS में अगर डॉक्यूमेंट आ रहा है, इसका मतलब ये नहीं है कि these all document will form part of your 2B. मैं रिपीट करता हूं, the problem is the document if appearing in the IMS invoice management system, and suppose you have clicked on accepted, but you are not able to see that document in the 2B. Is it the fault of the system? Not necessary, because the 2B ka logic remains same. What is the logic of the 2B? Supplier has filed the GSTR1 within the due date, and here in the IMS, are the IMS showing the document on filing of the GSTR1? No. Even if the supplier simply add the document, tax invoice or debit note, it will available in the IMS. So even you will accept, but it will not goes to your GSTR 2B. Another example. Sir, I am a supplier, I have added the same in the GSTR 1A. Whether 1A will be form part of the current month ka GSTR 2B? Answer is no. It will always be next month 2B. So it means even if I have added the same in the GSTR 1A, even if I have filed the GSTR 1A, but that document will not be available in the current month ka 2B. It is not the system glitch. It is the principle of the GSTR 2B. Again, there is a one problem which we have received from the trade representation. Suppose I have added the invoice. I have only added the invoice. I have not filed the GSTR1, but still you have the chance to accept, reject or keep pending. What is the better point? In that case, we can say, suppose you feel your invoice number is not correctly reported. You have the chance to reject. Then still I being a supplier, if my 11th is not crossed, I can make the not amendment, I will use the word editing, because amendment we are using when the one is filed or one is being filed. It means document can be changed and you will have the correct ITC which you can accept and take the input tax credit. But the problem is that sir, you have accepted, everything is okay, but still I have changed or I have deleted. Then the time when I will amend, not amend, again edit, delete or whatever I will do the changes in that invoice, the revised document will appear in your IMS. Original will goes out from the IMS. मैं GSTR 1 के before filing की बात कर रहा हूँ. After filing के scenario में, the document will remain available in the IMS. It will not go out from IMS. It will remain in IMS. So some of the trade bodies has requested that at least some sort of the alert should be given if any changes are made in the 1A, whatever, the document which are added but not filed. So the recipient should be aware. Again, the problem is, let's say, think about you have the 1 lakh ka tax invoice. You always get the alert only. You will spend the time to close the alert. What is the solution? Let's see what happened to this problem. Again, one more request was that if you are rejecting, if you are given the remark column that why you are rejecting, then at the same point of time it will be available to me, and I can see and correct that error while filing the R1. So again, that has been forwarded to the policy wing. Based on the approval, we can implement the same in the invoice management system. Let's move. The document which are available in the IMS, either accepted or rejected or no action is being taken. The three word I am using: no action is being taken, accepted or rejected. Once you file the GSTR 3B, all the documents which are eligible for the current month ka 2B will be moved out from IMS. It will not be available in the IMS. Which document will be available in the IMS? The category number 1, I can say all the documents which are having the pending status. Second category of the document which will remain in IMS, the document which are not eligible for this to be, probably the next to be, or corresponding document has not been filed by the GSTR1, etc. After IMS, I can say one part, that whatever the guideline has been given by the CBIC in the Circular 170 dated July 2022, I can say lot of work has been reduced to that extent. Suppose goods not received, you have the option to keep pending. Invoice not received, you have the option to keep pending. If you keep pending, will it form part of my 2B? Answer is no. It will not form part of my 2B. So you can continue to take the ITC only for which you are eligible. So to that extent, I can say the requirement of the Circular 170 will be reduced. So the temporary reversal reclaim is now, I can say, is only for the two category of the document. One, which are covered by the rule 37, that 180 days wala jo concept hai, कि अगर supplier को payment नहीं किया 180 days में, you need to reverse in the GSTR 3B under table 4B2, and on which 16(4) ka time limit is not applicable, correct? You can reclaim at any point of time. Second category of the document is the rule 37A, which talks about that if supplier does not file the 3B till September after the end of the financial year, then recipient should reverse the ITC by 30th November. So now I can say only these two category of the transaction are eligible to report in the table 4B2. Else all other document will not be available or eligible or not required to be reported in the table 4B2. Again, one of the view, supplier view. Supplier would be able to see all the document, whatever the action taken by the recipient. Mirror view would be available. As of now, the full supplier view is not available. It is under development. Very soon it will be made available to all. See, complete supplier view. Only small supplier view having the some detail are being made available in the last month, but it is under development. Yes, complete supplier view, it will might be take 2 months or something like that. Yes, complete supplier view would be made available, and if policy give the go ahead regarding adding the text box where you can add the reason of rejection or keep pending, then these would also be the part of the same development probably. Some of the action I can say regarding the GSTR 2B. Let me discuss this point. This point I have already discussed, that GSTR 5, 6 and ISK document will not goes to the IMS. RCM will not goes to the IMS. RCM, inward RCM. Or reversal we have already discussed. And then 16(4) and POS ka rule. As of now we know that ITC not eligible because of 16(4), or it is being restricted because of the place of supply rule. It will also not go to the IMS, it will directly go to the table 4D2. And table 4D2, basically, it is ineligible ITC, which is being identified by the system itself. try to understand this is very important, I can say. What is the treatment in IMS or behavior of IMS when the document is amended by the supplier? In that case, I will divide the document in two categories. One, if it is a tax invoice or debit note, or second, if it is a credit note. These two documents have the two different behave in the IMS on the amendment action taken by the supplier. The first point, ये PPT मैं सर को share कर दूंगा and intern sir will share to all, not required to मतलब write or anything, you can just see and involve in the discussion. अगर टैक्स इनवॉइस या डेबिट नोट है, उसको अगर सप्लायर ने अमेंड किया है, एंड इफ अमेंडमेंट आर फॉर्मिंग पार्ट ऑफ द सेम टू बी और टू डिफरेंट टू बी, ये कैसे हो सकता है? मैंने जीएसटीआर 1 में ऐड किया एंड लेट्स से आई हैव अमेंडेड इन द 1A. One will go in the current 2B and 1A will go to the second 2B. So can I say that it will form part of my two different 2B? I can easily say it will form part of my two different 2B. Answer is yes. Then in that case, it is mandatory to take the action on the original record and file the 3B before taking the action on the amended record. क्या मतलब हुआ? सर अगर आपने मान लीजिए ओरिजिनली एक्शन नहीं लिया और अमेंडमेंट भी आ गया, तो इट इज मैंडेटरी टू टेक द एक्शन ऑन द ओरिजिनल रिकॉर्ड. एंड अगर ये दोनों सेम टू बी का पार्ट बन रहा है, टू सिचुएशन व्हेन इट विल बी इन द सेम टू बी. सिचुएशन नंबर 1, सपोज सप्लायर ने जीएसटीआर 1 आफ्टर ड्यू डेट फाइल किया, विल इट गो द करंट टू बी और विल इट गो टू द नेक्स्ट टू बी? नेक्स्ट टू बी. उस डॉक्यूमेंट को उसने 1A से भी अमेंड कर दिया. 1A का डॉक्यूमेंट विल ऑल्सो फॉर्म पार्ट ऑफ माई नेक्स्ट टू बी. तो क्या दोनों डॉक्यूमेंट ओरिजिनल एंड अमेंडमेंट आर एलिजिबल फॉर द सेम टू बी? यस, क्योंकि 1 को ड्यू डेट के बाद भरा और उसी डॉक्यूमेंट को 1A के थ्रू अमेंड कर दिया. नाउ दिस टाइप ऑफ द अमेंडमेंट आर फॉलोइंग इन द सेम टू बी. उसके लिए क्या प्रिंसिपल है? जब अगर ओरिजिनल और अमेंडेड दोनों सेम टू बी का पार्ट बन रहा है, तो जो भी एक्शन आप अमेंडमेंट पे लोगे दैट विल बी कंसिडर्ड फॉर द पर्पज ऑफ टू बी. मतलब आपने ओरिजिनली एक्सेप्ट किया, कुछ भी किया, इट डजंट मैटर. आपने अमेंडेड को क्या किया? इफ यू हैव एक्सेप्टेड, फुल आईटीसी वुड बी अवेलेबल. इफ यू रिजेक्टेड, नथिंग वुड बी अवेलेबल. और इफ यू केप्ट पेंडिंग, अगेन इट विल बी कैरी फॉर टू द नेक्स्ट टू बी. बट याद रखना, ओरिजिनल डॉक्यूमेंट का एक्शन विल बी नलिफाइड बाय द सिस्टम. नाउ दिस पॉइंट विच वी हैव डिस्कस्ड, द सेम वुड बी एप्लीकेबल फॉर द क्रेडिट नोट. यस, बट क्रेडिट नोट में एक पॉइंट है, वो क्रेडिट नोट का अमेंडमेंट चाहे वो सेम टू बी का पार्ट बने या दो अलग अलग टू बी का पार्ट बने, उसके लिए प्रिंसिपल एक ही है. इन केस ऑफ द क्रेडिट नोट, वट एवर द एक्शन यू टेकन ऑन द लेटेस्ट अमेंडेड डॉक्यूमेंट विल बी कंसिडर्ड बाय द पोर्टल टू कंप्यूट योर टू बी. मतलब ओरिजिनल और अमेंडमेंट दो डिफरेंट टू बी में, तब भी ओरिजिनल का एक्शन विल बी इग्नोर. सेम टू बी का तब भी ओरिजिनल का विल बी इग्नोर्ड. Whatever the action you have taken on the latest credit note, amended credit note, that will be considered for GSTR to be. 16.4 का कंट्रोल आपको थोड़ा ध्यान होना चाहिए. मतलब कि 16.4 सबको मालूम है, टाइम लिमिट टू टेक द आईटीसी. ये 3 तरीके से कंट्रोल्ड करता है मेरा जीएसटी पोर्टल. पहला कंट्रोल है, मैं आज दिसंबर में हूं, आज मैं सपोज करो जीएसटीआर 1 ऑफ नवंबर फाइल कर रहा हूं. क्या मैं 31 मार्च 2024, 31 मार्च 2024 का डॉक्यूमेंट ऐड कर सकता हूं? एनीवन गेस? मैं रिपीट करता हूं क्वेश्चन. आई एम फाइलिंग द जीएसटीआर 1 फॉर द मंथ ऑफ नवंबर 24 ऑन 11th December 24. I missed one document of last year, let's say March 24. Can I add that document in the GSTR 1? No. The answer is no. Why no? Because it is time barred already. It is already time barred. What is the last date to take the ITC? That was 30th November. So if you file any GSTR 1 till 30th November, system will allow. If you file the GSTR 1 of let's say 24-25, मैं अंडरलाइन कर रहा हूं वर्ड, GSTR 1 of 24-25. If you are filing any GSTR 1 of next year after 30th November, it will not allow you to add the invoice or the debit note of last year. Point number 1 control. Second control, we know that GST का rule is there that we can file the return till 3 years from the due date. हम कोई भी रिटर्न, मेरा ऐसा भी तो सिचुएशन हो सकता है ना कि आई हैव नॉट फाइल्ड द जीएसटीआर 3B और जीएसटीआर 1 ऑफ द मार्च इटसेल्फ, पॉसिबल है. Assuming I have not furnished my GSTR 1 of the March 24, now on 11th December, I am sitting in the month of the December and I am filing the GSTR 1 of the March 24. I am adding all the invoices, all the debit note of March 24 in March 24 GSTR 1. Will it accept or not? Answer is yes, it will accept. It will accept because it is the same tax period, na? It is not the next tax period. It is the same tax period, it will accept. But once supplier will add the document and file the 3B, file the 1, all such document will go to the ineligible section of 2B. Table 4D2 of the GSTR 3B. Try to differentiate in these two. One, if you are adding the record in the next year R1, after 30th November it will not accept. If you are adding the record after 30th November in the same financial year ka GSTR 1, it will accept, but it will throw in the table 4D2 of the 3B, ineligible ITC. Third control, which was not there before, but yes, it was not there before, but yes, now it has been inserted because of the IMS. Suppose you have the document date of 23-24. You have kept pending. It will be available in the next IMS. You can accept and take the ITC. Yes. Again, you have kept pending. No problem. It will carry forward to the next month. So IMS does not have any month. IMS is simply a basket wherein some invoices will come and some invoices will goes out. That's it. IMS does not have itself any month. Kab document jayega? One situation we have already discussed, that whatever the document which are eligible for current month ka 2B and you file your 3B, then these document will goes out, either accepted or rejected, or you have taken no action, deemed accepted. But the document which are having the pending status will continue to carry forward. It will continue to carry forward till 30th November. On 1st December, can you take the ITC of the last financial year document? Answer is no. As per 16.4, it is not available. So IMS on 1st December itself will remove all these record. Now ये record कहाँ जाएगा? ये record, this is the first year का GSTR, first year का IMS, so probably it will be, I don't know what is the way of communication, but yes, going forward, it will form part of at some document which you can refer, either it is 2B or it is supplier view or somewhere else. But all the records which are being removed by the IMS because of 16.4 ka time limit is crossed, it will always be removed on 1st December only. It will always be removed on 1st December only. Correct ना? 30 नवंबर तक ITC के लिए eligible था, 1 दिसंबर को main eligible हो गया, तो 1 दिसंबर को last financial year का जो भी record है, that will be removed by the IMS. Correct. These are the three control of 16.4 by the GST portal. Sir, any what is the time limit, sir? ठीक है. So I think most of the part, so there is some concept changes कि 2B if the previous 3B is not filed, not available. So now like GSTR1, GSTR3B sequential. Similarly, the 2B is also sequential. कि 3B फाइल नहीं किया तो अगला 1 नहीं अवेलेबल है, 1 नहीं फाइल किया तो 3B अवेलेबल नहीं है. In the same pattern, the 2B would also be made sequential. And similarly, the QRMP taxpayer would not be able to see the M1 and M2 ka 2B. Yes, 2A would be continue to be made available, and that we have already told. So anyway, if you have any question, happy to take that. If any question, yes.
Because 2B will be generated for the month of October, and then only I'll be able to take in November itself, not November, and I'll be taking in October, in December.
Do you agree with this, or anyone has a contradictory view? Sir, can you please pass on one more mic?
It will be generated on the 14th November itself. I have a eligibility till 30th November to take the ITC.
Sir, I am asking one thing, just correct me if I'm wrong. Let's say I'm a late filer of the 3B. I have not filed my 3B of, let's say, September month also. I am eligible to take the ITC in that document? मैं repeat कर रहा हूँ वापस, अभी ठीक है ना आवाज? Repeat कर रहा हूँ मैं. Document which are there in the IMS, I am eligible to take the ITC till 30th November. I have not filed my September 3B. I can recompute my September 2B till the filing of 3B. Yes or no? Agreed? So let's say I am filing on 30th November 2024. And if you will remove the records on 1st November from my IMS, then how it will come in my 2B? See, IMS does not have any month, right? IMS will remove the records. If the removal of the records will happen on the 1st November, then suppose अगर कोई late filer है, which is filing the 3B of September, of July, August, whatever the month you take, on 30th November, recompute करेगा तो वो document तो आएगा ही नहीं ना. Then in that case, it will be the problem. So it has to be removed on 1st December. It is my understanding. Yes, any?
One more point.
Yeah.
Why has that M1 and M2 to be removed for quarterly filers? Is there any specific reason?
Any specific reason? See, the most of the reason normally we see the load of the technology on the technology. How the system will behave when 1 crore 40 lakh taxpayer will come on the system on a day and compute the 2B. These are the only technical problem. There is no problem in the law. There is no problem in the functionally side. Only problem in technology. And then we have discussed with the policy wing, and somehow we have come on board कि that चलो अगर इसका मैं अगर load कम कर लेता हूँ, तो probably we will give the fair IMS view or fair IMS action to all the taxpayer other than QRMP.
Because quarterly filer has to deposit the tax within the due dates. So for that he needs the data for 2B. Without that he will not be able to calculate. See, his
option is available. I do agree, sir. Either I have requested the same thing, so that when the decision was taken that 2B would not be available for M1 and M2, we have sent the request that these are the problem which has to be. So the policy would probably in the next council meeting discuss something and come out with changes in the rules or regulation somehow for the ITC in case of QRMP taxpayer. That is my point.
last question. Section 16 read with the rules says that e-invoice is mandatory for taking the credit if the supplier has to generate an e-invoice. Now for 2B, there is no check of e-invoice. Say my supplier has to issue an e-invoice. He has not done that. Now for me to check whether the supplier is eligible or not, with so many suppliers having, me having so many suppliers, it's not possible. So 2B does not have that check at present. So is GSTN planning for any such check?
Is
GSTN planning for any such check in 2B?
Probably it may come in the future. See, if you see the current advisory, see, first the taxpayer should adopt the practice. Still we can say, if you see the advisory, they are saying that if your turnover is more than 100 crore, you can generate the e-invoice within 30 days. Am I right? But whereas if I read the rule 48 sub rule 5, it simply says that it should be on real-time basis. Why? Probably e-invoicing would be the new concept for the trade in India. It would not be very easy to bring the law and ensure the compliances. So probably that would be the reason. But in the down time, probably it may come. How it will come, I don't know. But yes, somehow it will be developed. So now they have reduced the turnover from 100 crore to 10 crore. कि that 10 करोड़ अगर आपकी टर्नओवर है तो आपको 30 दिन के अंदर, बट 30 दिन का टाइम क्यों? लॉ तो मेरे को एक भी दिन टाइम नहीं देता. Law does not give me 24 hours also. So therefore, I think because whenever the decision is being taken, they are not taking the decision on just legality basis. They are actually having the access to the data also of entire 1 crore 40 lakh taxpayer. So based on the behavior of the taxpayer, somehow they are preparing the policy probably. Yes, sir.
Sir, you told that with respect to the removal of data from IMS after 1st December, it will be removed. Fine. So the provision says that I will be eligible to take the ITC till 30th November. Right? So anybody filing return till 28th is eligible. See, I will just tweak my question. See, I am filing the return after 30th November for the month of July. So my substantive right cannot be taken away in respect to claiming of ITC. So what our request to you, sir, that in respect of filing of return for the current financial year till July or August, the IMS should have the provision to add those invoices Because there may be many instances that where due to awareness or proprietorship businesses, they are not able to file. If I am filing the return after 1st of December. Sir, I am delayed in filing the return, but I am filing the return for those period where I will be eligible to take the ITC. Say for example, July return I am filing in December 15. I know as per the system it is making a bar, but there are substantive case judgments where I will be eligible. So that tweaking should be there in the system, sir.
अगर सर आपके पास judgment है, let's say if we talk about the judgment, see the portal, GST portal is driven by the law which is being prepared by the GST Council. ठीक है. So if they are saying that you have to take the ITC in any return till 30th November, it means normally as per the law, I am not allowed as per my understanding, limited understanding, on 1st December this document will not be available. Let's say in the future, some High Court given the favorable judgment to you, then obviously they have to act.
That is customized, but in many cases what I am suggesting means from the industry side that there should be some provision to add those invoices even if I am filing the return after 1st. So that is a suggestion.
Okay, sir. So I request Vivek sir to add in the, see there has to be the two separate recommendation I would see that one recommendation would goes to the policy wing, that is okay. We do not have anything to do with the policy wing. But yes, one suggestion which is exclusively linked to the GST network, that should go to the GST network as well as policy wing. So wherein Sarkar suggestion can be added and then we can discuss.
Sir, another small question. With respect to credit note, we are glad that so many suggestions has been taken. But with respect to credit
not
note,
taken, sir. It is under discussion.
It is under discussion. Might be we are expecting that it will come. But there are certain issues also where in case of consolidated credit note, we are not able to take the action. In case of goods raised, goods sent, but vendor have raised the credit note, our invoices are not booked in the system. We are not able to take the we are not able to do anything, we have to reject it. So what will be the fate of those suppliers? There will be hundreds of suppliers where we have rejected the credit note. Then there is no linking in GSTR 2B with respect to credit note. That delinking has already happened. I don't know. So all this has to be taken into account while modifying the system with respect to these IMS.
So you can share the concern, and also I would request that how you are thinking to resolve that issue, please add that as well.
Along with the suggestion, sir, will
please, that would help us.
Thank you.
Yes, sir.
According to his query, sir, since according to that practical perspective of view of reconciliation of the credit note, the earlier suggestion was to, advisory was to include the original invoice number compulsory with the credit note. So
that suggestion was also came from one of the trade association. They are saying that earlier option, which was optional, which was removed based on the trade request, now the trade association are saying that kindly add that also.
Sir, was also I have two things. One is that original invoice number should be part of a compulsory of the credit note, and the second thing is a single credit note should be for the single invoices.
So that will not be feasible.
Otherwise, sir, that combination of credit note, what he is talking about, that will be an issue. That proper solution will not be there.
Policy call. See, think about the big industries.
Numbers will go up, but action has to be taken at bulk one. Na?
I cannot comment, sir. That is a policy call. Correct.
That's a big thing, sir. We should allow some time.
Sir, एक बार mic लेके बोलेंगे तो बेहतर है.
The credit note issue is a big issue. It should be a bit flexible from our side because we are just rejecting blindly. We also don't know again that supplier has to upload. So that is our request for the difficulty we are facing. Of course, sir, it is an excellent suggestion what you have given, but that should be taken care. That is our only request. So
sir. I again request to the Chamber of Commerce
and not to sir only the linking. Our 2B or 2A also to have the field of the original invoice that is not there as on date. The original invoice number against which the credit note has been
removed from the portal, so corresponding.
So if it is been added there, so that should be reflected here also.
If whatever 2B, 2A with respect to debit credit note is nothing but the replica of the table 9A and 9B and 9C. So if some field will be added, obviously it will come in the 2B or 2A. That is not a problem.
Okay, thank you, sir.
Done?
Sir, in IMS, we need to go one by one invoice for pending cases. We have to select one by one manually.
If multiple filter option has been given, so you can select based on, let's say, I have given enter the GST number. So you can select based on the GST number, you can select based on the date, you can select based on the period. So filtering option are available. You can filter and then accordingly take the action. Or you can see, for example, there is a button, which is select all.
Okay.
And that is also being divided in two parts. See, if you have the total, let's say 50 records, and the records on the UI is available, let's say 10 record. So when you click on the select all, it asks you, do you like to select all the record which is available on the page, or do you like to select all the 50 records? So these all features are available in the IMS UI.
Okay,
And
sir.
if you like to add any suggestion, then again, I would request that will be, I think, if valid, then it taken care.
Okay, sir.
Easily
Thank
taken
you.
care.
Thank you, sir.
Arunji, one last question. So for IMS, you mentioned that 17.5 के credit notes में issue होगा, but वैसे credit notes में भी issue होगा जो
I have given only one example. Multiple issues are there. 17.5.
the supplier may be issuing a credit note to cancel a prior invoice which he has not given to me, or there was some error in it.
होगा होगा. मैंने अगर original invoice accept नहीं किया तो आप credit note कभी accept नहीं करोगे. If I even issue
So
the invoice, which you have
there
rejected,
are some things being taken care of in the IMS itself for those cases.
again, it is pending with the policy. If they will give the go ahead, we will implement the same.
Thank you.
Thank you, sir. I request you to please be on the dais for a couple of minutes, Mr. Chajar. Please. Thank you for joining us. He has come all the way from Delhi. And for the interesting session, I request Mr. Vivek Jalan to please be on the dais and present a memento on behalf of the Bengal Chamber.
Okay, no problem.
Thank you. We will now have an interesting session on income tax so that you are not getting bored on GST. So I request Mr. Vivek Jalan to please be on the dais and take forward the technical session on income tax.
এটা অন আছে দেখা যাচ্ছে
স্লাইড চেঞ্জ है স্যার স্যার
ঠিক আছে
হ্যাঁ অন আছে
ওখানে দেখা যাচ্ছে তো স্লাইড ओके सो हाँ जी हाँ हाँ प्लीज प्लीज
We have seen one problem. अगर आपको जीएसटी पोर्टल से रिलेटेड कभी भी कोई समस्या हो सकता है, आपको इमीडिएट सॉल्यूशन ना मिले, बट ऑलवेज डेवलप वन प्रैक्टिस इमीडिएट रियल टाइम बेसिस पर कि उसकी टिकट रेस कीजिए. Raise the ticket. See, for example, sir was saying some problem of the 1 and we could not file the GST R1 by the 11th because of that problem. Now the issue is, sir has not raised the ticket. So let's say if any solution would be there, then how the portal would be aware or how the GST would be aware that you are facing one problem. So always use to practice raising the ticket immediately whenever you are facing the problem. And second, always send the representation on regular basis through Chamber of Commerce. Thank you, sir.
Thank you, Arunji. And I would reiterate Arunji's views, not only on GST, but on all income tax, customs, etc. We are regularly as a chamber representing to the not only GST Council but even CBDT and for the customs on the CBIC side. So please do always send your recommendations, suggestions, and we would take it up with the corresponding authorities. Many a times it so happens that some recommendations, they are discussed. Let me assure you this, from the highest authorities we have got confirmation that whatever recommendations you are sending, thank you Arunji, they are discussed. Maybe some of them are implemented, some of them may not be implemented, but they are discussed, and from the chamber we keep following up, and not only at the local level. Local, of course, our PRO sir is here, Mr. Bonik, they are always supporting and always they are there to help. But even at Delhi, now with the chambers office in Delhi, also we are taking up, not also only in Delhi, but all state level commissioners also, Chennai, Mumbai, we have a National Fiscal Affairs Committee now, and from the committee our members are taking it up across. And in the same vein, I'll come to income tax. Friends, we had a few important discussions on GST, and in income tax, we will be witnessing now going forward a transformation, maybe not as big as GST, because GST was center plus state, but I would certainly say it would be equivalently big, and that is the income tax revamp which is going to happen as per para 137 of the Union Finance Minister's budget speech on 23rd July 2024. So what is the update on the Income Tax Act revamp? Already in October, the Honorable Finance Minister with the then Revenue Secretary, CBDT Chairman, and other senior officials of CBDT, they have had meetings. 22 committees have been formed at CBDT to review various aspects of the Income Tax Act, and from trade and taxpayers, because income tax is not only trade, it is also the individual taxpayer. So till October, more than 6,500 suggestions were received. From the chamber, we have suggested, we have in the next half a panel discussion with the trade members also, the tax officers of various companies, where we will discuss whatever we have suggested from our National Fiscal Tax Committee to the CBDT on the revamping of the income tax. But few of the suggestions, one or two I'll discuss over here. One is that, you all know now that the new income tax regime, that is the regime of the future. The government had made its view very clear in the last budget. Almost more than 75% of the taxpayers, they are filing their income tax return through the new regime, and they are increasing by the day. So new regime is the tax regime of the future for individuals. However, CBDT in the month of November, they came out with a data saying that a taxpayer who had an income of 7 lakh rupees in 2014, he paid around 29,000 rupees tax at that time. And today he is paying nil tax. You all know till 7 lakh rupees the tax is nil after the rebate under 87A also. But we have represented that if you see cost of inflation approximately 6%, then the person who was earning 7 lakh that time, today he is earning 12.5 lakh rupees. And on that, under the new regime, the tax amount is 90,000 rupees, right? So if you see the present value of the income of 7 lakh rupees, today that is 12.5 lakh rupees, and against 29,000, we are paying 90,000 rupees now. So, and if 29,000 is also to be indexed forward, it would be around 45,000. So what we have suggested is to make the new regime the only regime, but simultaneously to rationalize the rates also. Similarly, so many sections, around 298 sections, 130 plus rules in income tax, and in 298 sections, I have counted, there are 940 sections today in Income Tax Act, right? If you take all the subsection 194A, B, C, D, so many. So 940 sections. In one section minimum there are on an average 10 explanations, 10 provisos, right? And you can go on reading income tax and you will still be a beginner. So what we have suggested, and somehow it has found traction also with CBDT, that why not combine all these provisos and explanations, insert it in the sections, and most important, bring some illustrations in the sections also, right? I know illustrations in a section, it creates more litigation, but at least there is something to litigate. There is at least something where you can rely upon on the intent of the law. But with only provisos and explanations, even that option is not there. So, we have represented on this. Further, we will discuss in the panel discussion with the tax officers in the next panel discussion in the post-lunch session. Recent developments in income tax, PAN 2.0. This is the in thing. And as I was saying in the morning, this is apropos somewhat our representation. In the June 2024, we had a pre-budget meeting at the North Block, where Bengal Chamber also represented among 7-8 other associations, and Honorable Union Finance Minister, Chief Economic Advisor, Finance Secretary were all there in that meeting. So we have represented that this confusion of PAN and TAN, that is creating an unnecessary hardship. First, when the TDS comes to your Form 26AS, a TIN number is there, right? And there to find the tax credit and then link it to PAN, there is no linking between PAN and TAN today, right? And it creates a lot of hardship in the reconciliation. So we had suggested that this PAN, TAN portals and all services, they should be linked, and there should be a universal identifier, so that PAN can be identified with TAN, TAN can be identified with PAN. Possibly this PAN 2.0, this would ease out that issue, and PAN and TAN, all three portals, there are 3 portals now, they would be combined. Many other things have been eased out with this PAN 2.0, and already Cabinet has given its approval to PAN 2.0. We'll soon see active PAN 2.0. In the morning, Honorable Commissioner Sir was also saying, and we all know now, that GST, customs and income tax, they are all sharing data. And as Commissioner Sir was saying that any taxpayer, he doesn't even know. I mean, it is not that the government does not have the data, maybe the government does not have the time to go into all the data of all the taxpayers. But it is now an open book that the taxpayers themselves may not know so much about their data, which the government can unearth within a minute, a matter of minutes or hours. And not domestic. We have seen this now in globally also. And more than 2 lakh taxpayers, they have got notices or SMS alerts also, wherein they have been asked to disclose their foreign assets. So now government has data of the foreign assets also. And what are foreign assets? They are bank accounts of a resident in a foreign country, they are deposits, they are property, they are insurance contracts in a foreign country. So all data has come from foreign countries related to residents in India. And as of now, the government has issued this advisory, and they have requested many of the people, in case you have a taxpayer, maybe your some of your employees are there or officers are there, who have filed GSTR 1 and 4, where they should have filed 2 and 3 with the foreign assets. Even if they have not got the SMS till 31st of December, friends, this is a time where you can revise your return and file the revised income tax return with 3 schedules: FSI, foreign source income, tax credits, and FSA, foreign source assets, right? So 31st December is the due date. We have shared a link over here in the PPT. This PPT will be shared with you. You can go to this. They have issued a very detailed advisory on this foreign assets. So in case, even if you have missed out, this is the last opportunity where you as a resident taxpayer can disclose your foreign assets and foreign income. The biggest pain of all the at least corporate taxpayers, TDS, and we are going to discuss this elaborately in the post-lunch session. On the solutions, we all know there are many problems, but we will discuss mainly on the solutions. Problems to hai, but how to deal with that, right? And we all, we have common problems: 194Q versus 206C1H, 194C versus 194J, right? So on and so forth. 194O is to some extent solved with the TDS rate being reduced. So the new developments in TDS is from 1st of October. There are new rates in TDS. So all these are the new rates. From 5% they have been reduced to 2% from 1st of October 2024, right? So very recently I came through one of the taxpayers and on this 194H. So while the rate has reduced from 5 to 2, there was a unique problem. Maybe some of you may have the same problem, so we're discussing this. So one of the taxpayers, what he was doing, he was taking the help of a foreign agent, the travel agent for booking of for airline tickets, right? So the travel agent was charging him the price of the ticket plus his commission, right? 100 rupees, 200 rupees. And entire thing he was debiting towards the cost of the travel. He was not bifurcating that commission of the travel agent versus cost of the tickets. Friends, if this is the trend, then possibly you are missing on the TDS under 194H on the travel agent's commission, because the travel agent's commission has to be vivisected. Travel agent's commission, on the travel agent's commission, TDS under 194H needs to be deducted and paid. And mind that the threshold limit under 194H is only 15,000 rupees. So this portion maybe you can look into it in your firms, in your companies. 1st of April 2025, in case we have partnership firms, get ready for 194T, right? Now what is 194T? It is a 10% TDS on not only salary, mind that, to partners, but whatever payments you are making to partners in the nature of salary, commission, bonus, interest, or remuneration. On the entire payout, you have to deduct 10% TDS under 194 capital T. From when? 1st of April 2025. So one of the consultants was asking me that, sir, already my TDS form, it is showing 194T. So should I start deducting TDS on partner's salary from now? Answer is no. TDS is always from the date of implementation. The effect date of 194T is 1st of April 2025. So whatever you are paying to the partners credit from 1st of April 2025, on that you have to deduct 10% TDS. So in case you have a firm, partnership firm, till now left, right and center we were making the payment to the partners. Partner was coming saying, okay, transfer me this amount. At the end of the year, we were thinking, okay, whether to show it as share of profit or to show it as a partner's remuneration depending upon our income tax liability between the individual file and the firm. Now, no more of that. You have to pay TDS when you are crediting or paying to the partners. So this is a table you can go through at your own pace on 194T. One very, very important point here. In case the partner does not have a PAN and Aadhaar link, then you need to deduct 20% TDS as per 206AA. But if the partner has not filed his return for the last 3 years, 206AB is not applicable to 194T. While this situation will not come in our kind of members, but still 206AB, 194T is not subject to 206AB. It is subject to 206AA. This we need to keep in mind. Another amendment is, so all of you for your companies would be in the process of taking a declaration from your employees on the investments which are being done by them in case they are under the old tax regime. So in this Finance Act, provision is there and there is an easement. We all know under 206C on LRS, there is a TCS, right? So in case any of your employees, he has sent money outside India, there would be a TCS credit which would appear in his form 26AS. So now when you are deducting the TDS for the employee, as an employer, you have to take his form 26AS and give him the credit of this TCS for the purpose of deducting of TDS under 192, right? So this is a process change which I think is required at the employer level from now. Now is the time you start taking the declarations from the employees. Now come to another case. You see, many of the times what happens is for expats specifically, in case you have an expat for whom you are filing the returns, etc. Expats or crew members for shipping companies, their residential status sometimes changes at the fag end of the year, right? So maybe for the full year an expat remains a non-resident. Suddenly 180 days of his stay in India, it elapses in February, March. And the entire year's TDS you deduct in the month of February or March. The question is whether interest is applicable under 2011A in case this entire TDS is shifted to the fag end of the year. So it was decided by the Honorable ITAT Mumbai. There are other judgments to support this. In the case of Great Eastern Shipping Company Limited, that 192(3), it allows you that facility that in case you have not deducted TDS at the starting of the year, you can defer that TDS to the end of the year also. And during the year, if you are making any adjustments, plus or minus in the TDS deduction of your employees, interest is not applicable, right? So again, this is something where sometimes we receive notices from the TDS wing, and now I'll come to that. Each of the TDS officers, and there is a press release I think on this, they have a target of 50 assessees where they have to scrutinize as to why TDS is low or less, right? So, these kind of issues might come up, but these are res integra. It is in the law itself under 192(3) where you can take a benefit of that. Again, 194(1)A, right? It is for TDS on purchase of immovable properties or sale of immovable properties, right? So very easy, explaining by means of an example. There is an amendment now. A property, immovable property value is 60 lakh rupees. There are two joint purchasers. Each purchaser has 50-50 share. One purchaser pays 30 lakh, another husband, wife 30 lakh, right? So, and the threshold under 194 1A is, IA is 50 lakh rupees. So, whether TDS would be applicable or not applicable, whether it is qua purchaser or qua property, that was the confusion under 194 1A. They have solved this and now they have clarified it is qua property, right? So, if the property value is more than 150 lakh rupees, even if there are two purchasers paying 30 lakh, then also each purchaser has to deduct and pay this 1% TDS on under 194 1A. 194J versus 194C, this we'll discuss in the panel discussion, so I'm keeping it to that. Income tax law is also getting very, very stringent. Friends, we are discussing a lot on GST, and side by side, all of us who are doing income tax, we all know in this budget, income tax law has become more stringent, right? I mean, this is not the stringency part, but I'll show you. Penalty under 271H of 10,000 or 1 lakh rupees on late filing of the TDS TCS returns, that was applicable in case there was a delayed filing of 1 year. Now it is reduced to 1 month, right? And it is applicable from 1st of April 2025. So in case you delay TDS return by more than 1 month, then penalty under 271H would be applicable, right? So these all we'll leave it to the next. Interest on TCS returns. So if for delayed payment of TDS, the interest was 1.5% for part or whole of the month. TCS return, the interest was 1%. Now they have amended it and made it 1.5%. Okay, while time is running out, I have many slides, so I'll take on the mainly the important ones. Low TDS certificate. Many of the times, specifically contractors or transporters, when we go for low TDS certificate to 10B Middleton Row, right? Many of the times our low TDS certificates or nil TDS certificates, Form 13s, they are rejected, stating that we are not generating profits. But it has been held by the Honorable Madhya Pradesh High Court in the case of Goel Cargo Private Limited that the TDS officer who is issuing the low TDS certificate, he cannot look at the profitability. His jurisdiction is very limited to the 4 points under Rule 28AA. He has to see as to what is the income tax liability vis-a-vis the advance tax and the income tax payment. He cannot go and question you on your profitability. That is a jurisdiction of the JAO of the officers. The TDS officer who is issuing a form, low TDS deduction certificate, apropos Form 13, his jurisdiction is very limited to Rule 28AA. So, many of the times these forms are rejected. We can rely on this Madhya Pradesh High Court decision. And as I said, instruction number 1, 2024, maybe the era of, we already have many TDS notices, maybe it would increase further. There is an official instruction 1, 2024, which says on the various parameters on which the TDS notices can be issued. Section 195, TDS to foreign agents, where we are paying commission to foreign agents. You see, generally, even our advice always is that wherever there is a dichotomy in the law or wherever there is a confusion, it is better to deduct TDS, right, rather than not deduct TDS. But however, under 195, sometimes TDS becomes a cost, because many of the times the non-residents, they say, okay, I need this much amount of payment. I am not going to take a form 67 and claim it as a credit, that's it. So finally this TDS in foreign taxation under 195, it becomes a cost to you, right? So the issue is where you are paying a commission to a foreign agent who is merely getting you a business and taking a commission on that business. Is it a fee for technical services, and is it liable to TDS? Well, there is always you see argument with the department, but now there have been a plethora of judgments, including the recent one by ITAT Ahmedabad, where it has relied on the Supreme Court ruling in the case of Toshoku Limited, that if it is a simple commission, right, there is no technical services which is rendered. What are those technical services? That foreign agent goes to the prospective buyer, he gives a presentation, he makes a representation to the buyer on the technicalities of the product, right? So all of this, if he is doing where he is applying his technical knowledge on the product, only then it will be a fees for technical services. Otherwise, it is a pure, you see, commission. And there possibly, on this judgment, TDS under 195 may not be applicable. Few issues in income from other sources, right? Recent ones, and after obtain number of representations, so-called angel taxation under 5627B, that has been abolished from 1st April 2025. So for any private company, if you are issuing the shares at a premium, specifically for these startups, and this was very aggressively taken up by the DPIIT, because you see, startups, whatever you give the value, it will not be accepted, because startup is just starting, that is why it is a startup, right? However, there are plans and there are expectations, and that is why there is a funding of the startups. So this angel taxation under 5627B, where if you are issuing a startup share at a premium, of course we all know, you see, and wherever we are going outside Calcutta, we all know, the moment they hear Calcutta, so they says, okay, Calcutta se ho aap, to wahan to valuation ka one time, but now all of that has gone. So ecosystem is also, gearing up for that. But the fact is, this 5627B, it was a big problem, and they have abolished it. Angel taxation is no more, but there is a further problem. While angel taxation is no more, while they have abolished 5627B with a sunset, yet they have not scrapped 224(16), which talks about the income under 5627B. Right? I am talking, I am sharing a very technical view on this. Maybe it is an error, it may be rectified in the ensuing budget. So what prevails now? While of course there would be no more demands under 5627B, even if you issue a 10 rupees share at 100 rupees in case you have a valuation report, etc. But what can be invoked? It is section 68, right, for unexplained credits, right? So let us be aware, 5627B may have gone, but still section 68 remains, and it is a bigger problem because section 68 demands are raised at the higher rate of taxation. So let us not stop our valuation reports just because this 5627B that has been scrapped. Let us keep on with our valuation reports and see in case we get demands under 68. Buyback taxation, we have discussed a lot on this. So from 1st of October, in case a company is buying back its own shares, we have represented tremendously on this, as much as the capital gain indexation we have represented on this buyback, but this has not been heard. So from 1st of October 2024, if you are buying back any share, the entire amount will be treated as dividend and taxed under income from other sources. Possibly the government, and erstwhile Honorable Revenue Secretary was here after the budget, and he said that generally, buyback is always done, it is a form of dividend. Yes, it is right. But many a times there are genuine cases of buyback where maybe there is an ownership transfer. The promoter wants to take back the ownership. We already have few cases where actually the promoter wants to take back the ownership from the various people he may have given. In privately and closely owned companies, the ownership is spread when initially it is formed. Slowly the promoter starts buying back. In those kind of cases, this is a big, I would say, cost to the companies. And the biggest problem is the entire amount which is bought back. So if the entire consideration is 30 rupees, then the entire consideration would be chargeable under the head income from other sources. No deduction would be given for the cost of acquisition. So in case you are buying back the share, you are paying 30 rupees per share to your shareholder, and the cost of acquisition of the share for the shareholder was 10 rupees. He has to pay tax on 30 rupees and not 20 rupees. This 10 rupees would be of course carried forward, but as of now he would have to pay on 30 rupees. Well, 5 minutes more. I'll take the last issue, right, which would impact, while we may not be seeing the impact today, and this was not discussed a lot also in the post-budget meetings, but what I see is it is going to have a long-term impact. So under section 37, any payments for prohibition, for any act which is a prohibition under law, that is disallowed, right? So there were judgments 20 years back where people, specifically in Mumbai, they claimed a deduction of hafta payments, right? And that was allowed by the courts as a commercially expedient expenditure. So now the issue is settled that any expenditure which is a prohibition under law, that would be disallowed. But wide explanation to 37 in this Finance Act, they have enacted that any expenditure which is made to settle proceedings initiated in relation to contravention under law for the time being in force, as may be notified by central government in official gazette, would be disallowed under 37(1), right? So I am repeating, any payment made to settle any proceeding which is in relation to contravention would be disallowed, right, going forward. So let us say that you have a case of infringement of patents, right? You have a case of infringement of patents. We all know whenever we go for registry, there are cases, and sometimes we settle the case through arbitration. While the case would be settled with mutual arbitration, however, it has been initiated due to a contravention under the trademark law, right? And therefore, this payment which is made for infringement of this trademark, that can be disallowed under section 37, right? And this amendment, friends, have been made apropos the Honorable Delhi High Court judgment in the case of Desiccant Rotors International, where the Delhi High Court had held that any payment for infringement of copyright trademark, that is due to business expediency, right? So now, after this amendment, all of this would be disallowed. Now, similar, I am drawing analogy, right? And I will draw 2-3 analogies on this. Interest on delayed payment of TDS, right? Till now, we were saying it is compensatory in nature, interest on TDS, right? And therefore, it should be allowed. Well, there were, and it is not penal in nature. It is not for violation of any law. It is compensatory in nature. I am making a delayed payment of TDS to the government. Government is losing money, so it is charging me interest. Although there are corresponding contradictory judgment that TDS, the interest, there is a doctrine, right, that interest takes the color of the principal amount, right? So whatever is the principal, interest would take the same color. So since the principal is a tax which is not allowed, therefore interest on TDS would not be allowed. There are judgments in this regard. But now after this section 37 amendments, maybe the issue can be further litigated, that see, this interest is apropos the contravention of the TDS law, and therefore it would be disallowed even under section 37, right? And last, I would end with this. I think all of you, or many of you, who have got a GST notice, Honorable Commissioner Sir was talking in the morning, fake invoices, right? And what are fake invoices? Sirs are also there, from state government and central government. Sir, many of the times, this bill to ship to, all bill to ship to transactions are considered to be as fake invoices. Many of the times, I am not talking about West Bengal, but sir, I am talking about many other states, right? We have handled cases because my material is coming from Hyderabad to West Bengal, but my invoice is coming from my seller in Gurgaon. So it would be considered that I am purchasing invoice. But bill to ship, it is a allowed form of transaction in bill to ship to model. But GST is one part of the story. It is only related to disallowance of the credit under 271 AAD in income tax. The entire amount will be disallowed, entire principal payment, right? So GST is only a part of the story. There is income tax also, right? Many of the taxpayers under GST, to settle the cases, right? And I am again drawing an analogy. You may or may not see demands. many of us to settle issues in GST that okay, we don't want to go into litigation. On the 16(2)(c) cases, we make the payments, right? That okay, supplier non-existent, chodo, let us make the payments 2 lakh rupees and settle the case. I am leaving you with a thought. Is this settlement of case under 16(2)(c) in GST not initiated due to a contravention of GST law and hence not disallowed under section 37(1) after this budget, right? So, while you are accepting GST, I am not talking about the new amnesty scheme, because there government is very clear, there is no admittance. If you are settling the dispute under amnesty, no admittance, right? So, you can always contest. But if you are accepting a normal demand specifically under section 74, maybe 37(1) disallowance in income tax may also come to you. So, with this, I leave you with a thought. Thank you very much for a patient hearing, and we have the next sessions from department. Thank you very much. Questions on income tax? I think we have 2 speakers from the department. Post this, we can have a question answer session in case somebody has a income tax question also.
We will now proceed towards the technical sessions on GST. Since due to shortage of time, we are having 2 technical sessions together, and it will be moderated by the chairperson, Mr. Vivek Jalan. I request the speakers to please be on the dais. Mr. Ashok Kumar Das, Assistant Director, National Academy of Customs, Indirect Taxes and Narcotics, NASIN, Kolkata Zonal Campus. He will update us on latest changes in GST Act. And also Mr. Joyjit Bonik, Additional Commissioner of Revenue and PRO from Directorate of Commercial Taxes, Government of West Bengal. He will update on GST moves towards easing the burden.
Okay, so since we do not have much time, we'll immediately start with Ashok Kumar Das sir. Sir has a small presentation, and Bonik sir, as always, sir will give a small talk, and thereafter we will take question and answers. Sir wants to have more of question and answers. Sir wants to have your questions rather than one-sided. So, sir, I would request you to start the session with your presentation, and then we'll take sir's presentation.
Thank you, everyone. Thank you, sir, and good afternoon, everyone. Initially, my topic was recent changes in GST Act. But when I have prepared this slide, I hope that I have decided to change the name of the topic, because government is already tending towards ease of doing business, and the recent changes which were taking place in last two months are mostly relating to ease of doing business. So there are 14 issues which I have considered to be placed before you. This is my presentation plan. 12 issues, sorry. First one is, since the time we are having 20 minutes time to complete the slides and to take the questions by Jojit sir. Just I'm taking the issues right now. First one is extra neutral alcohol. This was initially attracting from GST. Presently, if extra neutral alcohol, that is, which is 100% pure, or rectified spirit, which is almost 100% pure, if it is used for manufacture of alcohol liquor for human consumption, it will be exempt from GST. It is implemented from 1st November 2024. Next one is the insertion of Section 11A. Due to general practice or different practices adopted by trade in trade balance, government may decide to exempt some services or some supply of goods, and this similar provision was also made in Customs Act and Central Excise Act. The basic difference, since Central Excise is already in some sectors are there under Central Excise Act, the basic difference between Section 11A of CGST Act and Section 11C of Central Excise Act was that in 11C there is a provision of refund. But in 11A, Section 11A of CGST Act, there is no provision of refund. Because why this provision has not been considered here? Because there are so many litigations in Central Excise Act, because there is a provision when government decided to waive some tax liability. So those who have paid higher rate of tax, they have applied refund applications, and different high courts have allowed the refund applications. Subsequently, in a case of Connaught Plaza, that Connaught Plaza, there was a McDonald's shop was there. They are selling soft tea ice cream, and there is a question of classification dispute, and according to that, they have paid higher duty, and after when the Section 11C notification was issued, they claimed for refund. Then Supreme Court ultimately decided the case. To deal with these problems of refund claims, in Section 11A, this provision of refund is not considered here. Only if government has any representation from trade bodies is received through GST Council by the government, then government may decide to waive tax. This provision was not there in Section 11. In Section 11, this is inserted through insertion of Section 11A from 1st November 2024. Now, this is an important change, because ITC, when there was a demand under Section 74, the tax paid against that demand notice were not eligible as ITC. Now, after amending Section 7, Section 17(5), the provision has been inserted to allow the ITC for the taxes paid against the demand notice of Section 74. But this provision is applicable from financial year 24-25. Prior to that, there is no ITC is eligible against for the taxes paid against any demand notice under Section 74. Now, restriction of refund of IGST. You must see that IGST refund is eligible in two ways: when the exports are undertaken on payment of tax, and if it is under LUT, then credit of unutilized ITC. If the goods is attracting export duty, in that case, the previous provision was that no ITC, no refund is eligible if the export is undertaken on execution of LUT. That means for unutilized ITC, no refund is allowed. But whereas if the export was undertaken on payment of GST, IGST, then a refund is eligible. To bring both the parties at par, the situation is actually there was a problem was that if someone is paying tax exporting the goods which is attracting export duty are eligible for refund. And the same thing, when it is exported by another party or the same party on execution of LUT, they are not eligible for the refund. So through this amendment, they have been made at par. Now, self-invoicing timing, it is restricted to 30 days. It is also, I think it is also a ease of doing business, because sometimes what happened, that the taxpayers didn't forget to upload the invoice, they didn't take credit. So for that, there is a restriction, within 30 days, it should be uploaded. If the supply is paid by an unregistered person to any registered taxable person, then the invoice has to be uploaded within 30 days from the receipt of supply. Accordingly, new rule has been inserted, 47A, and section 13 and 31 has been amended. Another important change, in case of summon. Generally, it is mostly practiced by our department, say CGST department. We are summoning on different occasions, in section 14, section 108. There's so many provisions. So on 70 occasions, you have, the taxpayers have faced this problem. They have been summoned, MD summoned, or any other person is summoned. Now, and accordingly, the same provision was made under section 70. Now subsection 1A has been inserted to allow authorized representative to appear before the proper officer for attending the summon. This is also an ease of doing business, so that the officer, the person who has been summoned, is maybe busy for other reasons, maybe busy with some business activities. So he may be represented by any authorized representative. This provision has been made through this insertion of subsection 1A in section 70. Now another ease of doing business, maximum amount of pre-deposit has been reduced from 25 crore to 20 crore for CGST as well as IGST. That means maximum amount was 50 crore previously. Now it comes down to 40 crore with effect from 1st November. Now for ISDs, if you visit section 140, the provision was that in ISDs, if the services were received prior to appointed day, that is 1st July, and invoice was issued after 1st July, then ITC was eligible. But now, with retrospective effect, a new subsection has been inserted in 140, that even if the invoice was issued prior to appointed day and service was received prior to appointed day, then ITC is eligible. The previous provision was that service received prior to appointed day, but invoice received after appointed day. Now present provision is that in service received prior to appointment day, invoice issued either prior to appointment day or after appointment day. All credits are eligible. Since appellate tribunal has not yet been functional, so some provisions have been made through some circulars issued by CBIC. A recovery of outstanding dues to be stayed if the first appeal has already been disposed and the grievance aggrieved party wants to appeal before appellate tribunal. In that case, just they will pay the appropriate pre-deposit through DRC 03. If already it is paid, then it is to be adjusted through DRC 03A, and they will just file an undertaking that we will prefer appeal before the appellate tribunal when it comes into effect. In that case, department will not initiate any recovery proceedings. Now, section 74A, common time limits for issuance of so-called notice, whether it is under the case of fraud, misstatement with intention evasion of tax, or normal cases. The previous provisions were section 73 and 74. The two sections were there. Now, for the cases initiated from 24-25, section 74A will be applicable. In that case, the main issue is time limit. The previous provision was that order has to be issued within 36 months and SCN has to be issued within 33 months. In case of fraud, it was 60 and 54, but in case of 74A, SCN has to be issued within 42 months and order has to be issued 12 months from the date of issue of SCN. It also gives some opportunity to the breathing space to the departmental officers, because you know, because of this time bound constraint, our officers are very much busy. It also create problem because you, to you also, you know, that there are provisions for at least 3 adjournments in the adjudication proceedings. If the SCN is issued on 33 months and order has to be issued within 36 months, then to give 4 per PH, it was very difficult to give 4 PH in 3 months' time. So this will give some breathing space to the departmental officers as well as to the taxpayers. Now another clarification, that is as is where is basis. Recently, probably day after yesterday or day after day before yesterday, one notification has been issued that foreign airlines companies functioning from India, if they are receiving any service from any related party outside India without any consideration, it is exempt from GST. Now, issue में ये भी हो सकता है, देखिए, तो some parties are paying taxes at the rate of 18%, and some were not paying taxes. They are availing the exemption. After issuance of this notification, this problem may arise, and on the subsequent day, government issues a clarification, but that the issue will be finalized. Actually, this notification was issued on 10th of October. Sorry, 10th of October, and clarification was issued on 11th of October. So, as per the notification issued on 10th of October, from 10th of October, any supply of service received by any foreign airlines company in India from its related party without consideration is exempt from IGST. Now, sometimes some company may pay taxes at the rate of 18%, and some company didn't pay tax at all because of this clarification. I am talking about the period before 10th of October. On the next day, government issues a clarification that the issues relating to 9th of October and prior to 9th of October should be treated as is where is basis. That means if anyone has paid 18%, okay, fine, no refund. If anyone has paid 0%, there is no problem. But no refund is applicable. Just I am giving you some example. Because of some clarificatory issues, some explanatory notes or some exemption notifications, there may be some dispute relating to different tax structures. Suppose a party is paying 5%, some party was paying 12% of tax for certain commodity. In that case, if it is decided that by the government that the tax rate will be 5%, then it will be treated as 5%. And he who has paid 12% will not get any refund. Similarly, if any goods or service is attracting 5%, now government has decided to exempt it with retrospective effect. In that case also, those who have paid 5% will not get the refund of additional amount. And if the amount is 5%, now it is government has decided that no, the actual amount will be 12%, rate of tax will be 12% with the retrospective effect. In that case, who has paid tax at the rate of 5% need not to pay the additional amount. Now the last point, what I like to highlight, there is waiver of interest and penalty amnesty scheme. It is introduced through section 128A. These are the basic features, that the demands pertaining to the period from 1st July to 31st March 2020 will be considered against this scheme, and tax is to be paid by 31st March 2025, either by DRC 03 if the tax was, if the amount was not paid, if it was already paid, it can be adjusted through DRC 03A. If the tax is to be paid against any notice or statement means periodical notices. In case of similar issues, the department is issuing statement. So, jo periodicals SCN were issued to the different parties. Now it has been changed to statement. In case of notice and statement, that means the case has not yet been finalized. In that case, the application has to be filed through SPL 01 by 30th June. And if the order has already been issued, then it is to be filed by SPL 02. Sorry, it will be SPL 02 by 30th June 2025. And in this case, only the cases where notices or statement or orders issued under section 73. Cases issued under 74 and decided under 74, or cases issued under the SCNs or notices issued under 74 would not be considered under this amnesty scheme. But if SCN was issued under section 74, an appellate authority ordered that the case should be fit for under section 73. In that case, that SCN or notice which is returned for de novo adjudication will be considered under this scheme. But it is to be decided only when the case has been ordered by, application may be made by the party, but within 1 month from the issuance of order by the adjudicating authority, the document has to be uploaded. That the case has been decided under section 73, not under section 74. And if there be 2 or 3 cases, separate application has to be filed. And along with that, one undertaking that I am withdrawing the application, an application has to be filed before the appellate tribunal, that has to be filed. And once it is finalized, then the order of withdrawal, accepting the withdrawal application has to be submitted before the department. Now, some issues which has been clarified by CBIC, like when tax has already been paid, tax element has already been paid, what will, how the issue will be treated? Because this is waiver scheme for interest towards interest and penalty. No other benefit is extended through this amnesty scheme. And tax is to be paid by 30th March. If tax has already been paid prior to issuance of this notification, then 128A, section 128A, this scheme is also available to him. Since the amount has already been paid through DRC 03, then he has to file DRC 03A. Another issue, suppose amount has not been recovered from the party, but it was recovered from another person as a due from any person. That means the case was initiated against me. The amount could not be recovered from me, but someone, I am getting some money from someone, and the government has recovered the money from him. Yes, that amount will be considered here as tax paid. Now, another question was raised before the CBIC, that if any interest and penalty has already been paid, can it be adjusted? No, because since interest, the waiver scheme is only for waiver of interest and penalty. If interest and penalty has already been paid, that cannot be adjusted against the payment of tax. In case of import duty, when IGST has been paid, actually IGST can be paid in case of intrastate transaction as well as importation of goods. For the provision of Customs Act, that IGST is collected as per the provision of Customs Act, section 3 of Customs Act. So this import duty is not eligible under this scheme. Any interest and penal consequences arising out of that demand notice is not eligible under this scheme. Whether ITC, accumulated ITC, can be utilized for discharging tax liability? Yes, because that is also my money, so I can use the amount towards my discharging tax liability. Late fee redemption fine, can it be exempt through this waiver scheme? No. Because this scheme is restricted to interest and penalty. No other benefit can be extended through this provision. And demand pertains to multiple period. What will happen? It starts from 1st July 2017 to 31st March 2023. Now, question is that first he has to pay tax for 1st July to 2020. Suppose the amount of the duty tax amount is 1 crore, and from 1st of April 2020 to 2023 amount 1 crore. So now he will apply for waivers of interest and penalty. He has to pay the entire tax amount up to 2023. If any SUCOS notice has been issued for a period from 1st July and beyond 2020, in that case he has to pay the entire tax amount, and waiver is applicable only for the interest and penalty relating to the period from 1st July to 2020. So now I am concluding my session. Now I am requesting Jayajit sir to take the questions from you.
Good afternoon. Actually, we have already entered into the arena of lunch hour, so I won't take much time.
We can extend a little bit, sir.
No. As it was told that there was 2 technical sessions. One is the latest changes of GST, and other is easing of tax burden, which was given to me. But when I was talking this morning, I see that many of the changes are overlapping. So we thought that both the sessions can be merged, and that's why we are here together. Das sir has told all the latest changes, but in respect of easing of tax burden, the topic given to me actually, you know that the easing of tax burden may be provided either by way of amending act, amending rule, rate rationalization, issuing several notifications, and also by way of issuing clarifications. And you are have already witnessed that several notifications, several amendments have been made just to provide reduce the burden of tax. So sir has already told that recently introduced amnesty scheme, amendment in section 16(5) and 6, that is already discussed. I would only refer only 2 important changes, and I think you are also aware of this. One is Rule 88B. Can someone highlight me what Rule 88B says? What is the reduction is provided or the reduce of burden provided by this Rule 88B? Anyone? No. It is related to payment of interest. As you know that the section 50 says that the interest is payable on delayed filing of return, delayed payment of tax rather, but it is payment, if it is payment made through electronic credit ledger and the supply made in that return is reported in that particular return, though return is filed belatedly, there would be no interest. But now the provision is made that earlier, if the payment was made from electronic cash ledger, interest would be levied. Now it has been, provision has been made that on the due date of filing of return, if there was the balance available in the electronic cash ledger, then even if the return is filed belatedly, no interest is payable on that amount which is available in the electronic cash ledger on the due date of filing of that particular return. That is one benefit provided to the taxpayer. And another is related to e-commerce operator TCS provision. As you know that earlier the amount was 1%, now it has been reduced to 0.5%. This is also been done from the representation from the trade body that 1% tax is deducted, and then the taxpayer has to claim refund under the ground of excess balance in electronic cash ledger. And just to reduce this burden, the tax rate has, the deduction rate has been reduced to 0.5%. These are the major two changes that has been made to ease of reducing the tax burden. Now, I'd like to invite some questions from you. Any questions from you?
Yeah, sir has a question. Mike.
As Mr. Dash said, for summon proceedings, any authorized representative can attend. Can an advocate attend these summons proceedings? Because previously, at least in central excise, advocates are not allowed to sit at least, 20, 30 feet away from the person called for summons.
Actually, we may refer one case. In 1992, it was decided by Supreme Court that there is a difference between interviewing and interrogation. During interviewing, since this is when we are questioning someone, he is not an accused. We are getting some information to develop our case. In that case, no lawyer can be engaged. But when we are interrogating someone, then lawyer may be engaged. That means after arrest, or when the charge is already framed, we are inquiring into any case. In that case, advocate can be engaged. That was decided by Supreme Court in 1992. Now, authorized representative, generally in our CGST Act, I think it is not defined. It is defined in Customs Act. If it is, if they are covering actually authorized, now it can be extended to any person, because previously that option was not there. Yes. That's why I am telling you that these are ease of doing business. Now it is extended. That means I am not allowed with the advocate. I am authorizing someone, my office advocate or any client officer, to represent on behalf of me and to depose before the proper officer.
Okay, thank you. Another question, sir. Payment of tax, GST, under RCM invoices within 30 days from date of providing service. Mostly GTAs are covered under RCM, mostly. Now GTA takes my goods from here to say Ahmedabad, it takes 10 days. Unless I get a signed consignment note, I cannot make any payment to him. Neither he is able to submit the bill to me within 30 days. Then how can he make payment within 30 days of provision of the service?
This was already discussed in the morning session when Commissioner sir was here, and he has asked us, we'll make a representation because this is a practical hardship. It is not possible to crystallize when service has been rendered, right? As of now,
service can be rendered as soon as the material is delivered to his place.
Commissioner sir has already said to make a representation. We'll make a representation from the chamber.
The chamber will do it or commissioner will do it?
No, we will make a representation to the commissioner, and commissioner sir will forward it to the GST council, to the law committee. CCT sir is also there. So till that time, you have to find a way out.
Then another question, small question.
Last sir. There are others also.
Rule 9610, since you are talking about refund of export duty tax, Rule 9610 has been omitted by notification dated 8th October, but not retrospectively as per the rule notification. But Kerala High Court in the meantime has said that it is it's ultra virus. So which one will stand?
Sorry, I can't get your question. Rule 9610 has been omitted, yes, sir.
Has been omitted.
Yeah.
But Kerala High Court omitted it prospectively only, because it says that it's effective from date of notification. Kerala High Court, a very recent case, has held that it is ultra virus to the act. Only Kerala High Court. I have not come. I don't know whether Mr. Jalan has come across any other cases.
Being a tax officer, we are being tax administrator. What we can do, we will just go through the rule. Yes, there is an option for you. You can present before GST Council take up the matter.
Any other High Court
We
case?
have already taken up this before the council also, and even CCT sir and Chief Commissioner sir also, that this 9610 is actually a hardship. Council has accepted also to an extent. They have made it prospective. So let us see. Kerala High Court, is one High Court. Let us see other High Courts. As far as I understand, as of now, no other High Court has passed a similar.
But I think in this context, I think you must be aware of the circular issued in this regard, regarding 9610, that where the taxpayer has availed the benefit of the customs notification and exported goods with payment of tax. If he pays the tax along with interest, no recovery will be made. That has been regularized.
That is old one. Thank you, sir.
Okay, next, anybody? Yeah. You can say like this or
Like we have separate provisions for e-commerce industry, like for TCS, and we need to have GST registrations and all. Why not ease of registration for e-commerce industry is being provided through the council in the act, so that again the same problem is not faced by the e-commerce industry. And then the concept of virtual place of business should also be there in the act. So this is what I suggest.
I think your issue has been duly taken care of in earlier occasions.
Yes, certainly by your department, I accept. But again, we face such situation in other areas or other states. So it's just a proposal. If we can take it to the council, and if it can be incorporated in the act itself.
No, for SGST part, I can say that you know it very well that, and for the suppliers who supplies through e-commerce operator, we particularly follow a special procedure for that, and I think there is no problem in granting registration for this class of taxpayers.
No, in West Bengal state, we don't have any problem as such. I told in the morning also, but for other states, if it is clarified in the act itself, so there would not be any confusion further.
So the issue may be raised through the chambers. Okay.
Sir, we will raise, but this is quite a critical issue for MSMEs.
Yes, right.
Because an MSME who is like on the e-commerce platform, as he said, he has to take a small MSME, maybe 10 crore turnover. He has to take 20 registrations.
Even 50 lakh.
Maybe 50 lakh.
20 states.
20 states. That is impossible. So this virtual place of business, maybe that is there. Of course, I understand, center state authorities are there. So this additional place may not happen, but virtual place, sir, this
yes,
we will
virtual
kindly
place should be
represent.
legalized. Okay, thank you so much.
Yeah, any other person? Yeah. एखाने mic दिए हुए।
Good afternoon. So my question is on the amnesty scheme, which sir has explained very beautifully. There is a case where after the amnesty scheme has been introduced and after the effective date has come, a person has not applied for a refund, for an appeal, and a recovery has been made against the tax, interest and penalty. A recovery has been made against tax, interest and penalty, everything, after the scheme became effective because of the delay of the forms. So what is the remedy available to taxpayer?
If you specify the case in a personal manner, then I can take up the issue. But for our state part, I can assure that after the amnesty scheme has been introduced, we have advised all the proper officers to refrain from recovery of the interest and penalty particularly, so that to avail the benefit of the amnesty scheme to the taxpayers. So you can please give me the specific case details, okay?
If it is the state, then sir is available, maybe.
But still, if the recovery has already been made in respect of interest and penalty, the tax amount can be adjusted for amnesty scheme if you like to prefer for amnesty scheme. But interest and penalty which has already been recovered, there is no scope for refund of that amount. That is the scheme. But still you can refer the case, okay?
Okay, I think everybody is waiting for lunch. Only to answer you, I was searching for that. There is a section 116 which defines advocate is can be an AR, right? So under 116 Ache. CGST. Yeah. Okay, thank you very much, sirs, for your valuable time and sparing time. No, thank you.
I request Mr. Jalan to please present memento to the delegates. We request you to please wait for at least 1 minute.
Mr. Mukherjee can present one memento to sir.
We have also a pleasant task to perform before the lunch. And I also request Mr. Mundra to join, because Mr. Mukherjee and Mr. Mundra both are the members of the Fiscal Affairs and Taxation Committee. Please present mementos to the dignitaries. Thank you. We will break for lunch. We will join again at 3 p.m. Lunch is at the Bengal Lounge, 3rd level.
Hello, check. Hello. Hello, check. Check. Hello. Check. Hello. Hello, check. Hello, check. 1, 2, 3, 4, 5, 6. Hello, check. 1, 2, 3, 4, 5, 6. Hello, check. Hello. Hello, check. Hello. Check. Hello. Hello, check. Hello. Hello, 1, 2, 3, 4, 5, 6. 6, 1, check. Hello. Hello, check. Hello. Hello, check. Hello.
Hello, check. 1, 2, 3, 4. Hello, check. 1, 2, 3, 4, 5, 6. Hello, check. Hello, check. Hello, check. Hello, check. Hello, check. 1, 2, 3, 4, 5, 6. Hello, test. Check.
Hello, check. Hello, check. Hello. 1, 2, 3, 4, 5, 6. Hello, check. Hello. Hello, check. Hello. Hello, check. Hello. Hello, check. Hello, check. 1, 2, 3, 4, 5, 6. Hello, check. Hello. Hello, check. Hello, check. Check, hello. ছ নম্বর এটা হ্যালো চেক চেক চেক
Hello, check. Hello, check. Hello, check. Hello. Hello, check. 1, 2, 3, 4, 5, 6. Hello, check. Hello, check. Hello, check. 1, 2, 3, 4, 5, 6. Hello, check. Hello. Hello, check. Hello. Hello, check. Hello, check. Hello. Hello, check. Hello, check.
হ্যালো চেক চেক হ্যালো চেক চেক হ্যালো হ্যালো চেক ঠিক আছে
We are starting the panel discussions now. Our first panel discussion is roundtable tax experts roundtable on GST. I request moderator Mr. Rajoshi Dashgupta, Executive Director, Head of Indirect Taxes from Aquilo, to please be on the dais. I also request the other panelists to please join. Mr. Sanjay Verma, Director of Finance from Andrew and Company. Mr. Govind Shekhar Mudra, Head Taxation from Karanchand Thapar. Mr. Debashish Mukherjee, General Manager, Finance and Accounts from M Junction Services.
Good afternoon, everyone. I know that the session after lunch is really a little challenging because after such a sumptuous lunch, it becomes a little difficult to actually understand whether to enjoy the lunch or to enjoy the session. So just to keeping that in mind, so I'll try to make the session as interesting as possible. So today, primarily, this session is is about the current challenges which the industry is currently facing on GST and the representations in relation to that. So in this session, we have some esteemed speakers who would be talking on this. So our first panelist is Mr. Sanjay Verma. Mr. Verma is the Director of Finance and Rule. We have also Govind Shekhar Mundra. He is the Head of Tax, Karamchand and Thapa. And we have Mr. Debashish Mukherjee. He is the General Manager, Finance and Accounts, M Junction Services. So before I actually pass it on to the esteemed speakers, just to set the context as to why we are all here. Now, as you all know that GST was introduced in July 2017, and it's been 7.5 years that this law has been implemented. And during the 7.5 years, primarily, GST has ticked most of the boxes so far as the expectation of the industries and the assessees are concerned. But still, there are certain teething issues that the industry is facing till date, like input tax credit optimization and management, litigations and the cost of litigation, legal interpretations, cost of compliances, so on and so forth. Just to elaborate, like when GST primarily came in, so in the white paper of GST, it was clearly mentioned that GST aims at seamless flow of input tax credit. I still remember this word, seamless flow of input tax credit. Now, with the kind of notices that is being issued all across to industries, especially with regard to input tax credit, it seems that the word seems to have gone less. So it is primarily, it is less input tax credit than seamless input tax credit, but it is being the endeavor of the government to coming up with circulars, notifications to address this. There has been various court decisions, though, which has come up with some caveats, and all these things are helping the SSE, but still some issues continues, like disallowance of input tax credit for the fault of my supplier, which is a continuous teething issues, and notices after notices being issued on that, which is really being an extreme pain point for the industry. There has been issues relating to interpretations and of law, whether it would be taxable supply or exempt supply, whether let's say it's a 1/3 deduction of land on real estate, whether that would be an exempt supply or we do not show it, all these things, when it's so many teething issues and all, interpretation of valuation issues, especially with regard to real estate and related party disclosures. We have new issues relating to corporate guarantees, wherein there are so many issues, like if a corporate guarantee is being issued for a period of 5 years, the law says that you need to pay tax on the year the corporate guarantee is being issued for the entire 5 years. So it is that 5%. So why? It should be on year-to-year basis. So there has been so many such issues which are there. So today primarily why we are all here is to discuss such industry issues, and for which the industry stalwarts are there. So on this, it suddenly reminds me of a particular thing which I would like to ask Mr. Verma regarding things like, let's say, there is a common industry issue that what happens that under GST, every state you need to have a registration. It's irrespective of the fact, like in service tax, we had a centralized registration, but under GST, every state we have to have a registration. And let's say we have registration in 10 states. Out of those 10 states, there might be 2 states where I have my credits have accumulated, and there are excess balance. While in some other states, I have to pay out of my cash balance. So, and there is no such mechanism of transfer of such credits and all. So, Mr. Verma, if you can kindly address this, and whether you are facing such issue or not, if you can kindly address such situation.
Yeah, thank you. I'm audible. So first of all, I would like to say that law, GST, income tax, or any other law is not physics or maths, which we can say 2 + 2 or certain formula is there. So if you see the Income Tax Act also, in 1961 until now, the litigation is there. Wherever the law comes into the picture, there will definitely be an issue of interpretation. You will interpret the same thing. I'm not defending the department, but I'm saying why the litigation is there and why the law is like that only. Because I read the law as per my convenience and as per my positivityness. So what is profitable to me, how beneficial it is to me. Similarly, with GST also, it was started with this completely change in the scenario where the Form 16, Form C, Form 31, so many physical forms were there. And then these were like this, that ITC and all tax will be merged, and there will be a completely seamless business in the taxation, and the ITC will be there. And if we see the problems in the department also, that there are so many fake cases are also there. That is why this thing is there in the department, that each and everything is scrutinized and seen. And so far as this concept is concerned, is very rightly pointed out, Mr. Dasgupta, that one time it is basically affecting my complete working capital also. One state, because it is not allowable in between among the distinct person. If you are having a credit in your electronic credit ledger, say X amount, and it is lying pending, and you are not able to utilize it within the state, but otherwise, to the on the other hand, you are liable to pay in the other state, like you are having the credit in this West Bengal, and you are paying the amount in Maharashtra also. So this thing is also there. So definitely this matter can be taken up, and if we department agrees, or it is at a senior level, top level, it is agreed that some provisions there under section 49(5) that can be helpful for all of us.
Thank you, sir, for pointing it out. Now, another question which I have, and which, since we are all talking of input tax credit, so I would like to ask Mr. Mundra another very burning issue relating the input tax credit, that on the notices that we are receiving in relation to 3B 2A reconciliation, or in relation to your supplier not filing returns in time, and or the retrospective cancellation of registration. So what is the issue, and what is this thing that you are facing which is really painful for your industry, and this might be for all industries, and how you are planning to go ahead, or how you think that BCC&I can help you in doing a proper representation on this?
Thank you, Rajshri. First of all, good afternoon to all, and thanks to BCC&I for inviting and having this knowledge session. Rajshri, this question, I believe, is a prominent question which not only me as a tax head is facing, but I believe all the industries are going through. The larger concern about availment of ITC and the complete due diligence of ITC. So, sharing one of the example which we have been thoroughly facing since last 4-5 years is like on the creditability of the vendors not complying with the GST, irrespective of the fact that we have been making the payments to them through proper banking channels, and still then we are ending up, ending up incurring a huge legal expenses, LISO, traveling, everything, in the interest of a particular payment which has been done through proper channels. Still then we have been denied all the ITC. So under that circumstances, since it is an industry-wide issue, there have been several litigations and several welcome judgments, like LGW Industries, which is a Calcutta High Court judgment, then Suncraft judgment, which Honorable Apex Court has given order in alignment with the thought process that if the payments has been done by the all the registered taxpayers to the vendor from proper banking channel, that the first onus lies on the supplier. However, this thought has not been adopted thoroughly by the department, in the sense that the thought still remains that if the compliance is not done at the end of vendor, the credit has to be questioned, and again by virtue of section 155, the onus of taking credit is on the registered taxpayer. So this is creating a lot of trouble, and it is not making the process smooth, rather it is creating cumbersome, increase of litigation. So I believe some sort of relief, irrespective, like I remember in May 2018 there was a press release which again said that first you have to catch hold of the suppliers, but things are not happening in this direction. So something has to be done to cater and not only mitigate this, but to address it in such a manner, like we at the outset know, at the beginning know that the vendors with whom we are dealing are actually tax compliant, and based on the merit of the vendor, based on the due diligence of the vendor, certain credit need not be questioned to the registered honest taxpayers. So I think that is it from my side.
No, thank you. But I just would like to add on this and just would like to ask that aren't you also facing a little bit of a challenge from our divergent decisions? Like if I recall few days back, there was a judgment of the Karnataka High Court, which primarily on this issue has passed on the entire burden on the purchaser, saying that the purchaser has to primarily give the details of the transportation of the goods, have to ensure the complete compliances and everything. So aren't you also think, is it not that the situation that in one end definitely there has been good things coming because of because for all these things they have come up with circulars wherein in such cases where there is no 2A properly, it is not been reflected in 2A, you need to give a certificate below 2 lakhs, it's self-certified. Above 2 lakhs, if I recall correctly, it has to be done by a chartered accountant.
I think you are talking about Circular 183,
Yeah,
right?
so although those things are there, don't you think also that this judgments which are also being delivered is creating a little bit of difficulty for you? Because, and do you also think, because we have also faced situations, but irrespective of the fact that you file a certificate, things are being denied on the ground that there might not be mentioned, because we have faced this, it is not mentioned that goods have been supplied, or there is a ward which has not been supplied, for which they are clearly disallowing the certificate, irrespective of the fact. Circular nowhere, anywhere, mentions what should be the format of the certificate or that. Are you also facing this kind of issues?
To some extent, yes, but frankly, taking the content out of what you have just shared, the major concern here is that not accepting certificate or not accepting the thought process which the honest taxpayers carry. I think some sort of direction should flow. I mean, the larger question remains that it is case specific what you have faced, what I have faced, but then the larger question still remains about the cost being incurred for all these things, the contingent liability increasing time and then on account of these litigations. So some redressal should come out in such a manner that these concerns can be appropriately dealt both at the registered taxpayers end as well as the GST department's end.
Thank you, Mr. Mundra. Now, now I would like to go to Mr. Mukherjee. So if I recall, you have a very interesting issue relating to your kind of business, which is quite unique, because that is an issue which primarily, what happens in many cases, GST in certain cases might be a boon to some industry, might be a bane for some other industry, and it is exactly what is the issue in hand with M Junction. And which is quite an interesting issue, and which is a typical industry issue, and I guess representations have also been made, but it is yet to be resolved. So if you can kindly share the issue which you have.
Yeah, good afternoon everyone. I am from M Junction. So M Junction is India's largest e-auctioneer of goods and services, and we have started off domestically, and first 15-20 years domestically we have established ourselves, and now we want to go outside the shores of India. So when we try to go outside the shores of India, what we see is that in case of, since we are an intermediary and the purchase of on sales of services or goods is facilitated by M Junction is treated as an intermediary. As M Junction is an intermediary, whatever service income M Junction earns from selling these services abroad gets taxed in India as the place of supply is in India. And this is a sort of a carve out from the normal VAT GST laws which happen across the globe, wherein nowhere does export transactions are taxed. However, here we are taxed and we are becoming uncompetitive, and we have made the necessary representations through the chambers. However, nothing has happened on that in respect of services. And in respect of goods, what has happened is there was a circular which was given in 2019 which deals with goods which have moved from outside India, where both the destination and the source is outside India, wherein they have given a whole list of 5 requirements which are there, which is a very onerous provision. And normally the buyer and seller would not like to share such documents with us because the bill of ladings are concerned and the agreements are required, and because there are many transactions which are privy to the buyer and seller, and they would not like the intermediary to get into all those things. So because of that, what we are finding is that we are now not being cost efficient and cost competitive when we are approaching the foreign geographies.
So primarily you are trying to say that it is the definition of intermediary which is creating the entire issue. So primarily, if it is more importantly, which might be somebody who is doing an import of services, for him it is a little bit of advantage. For export, so what you primarily need is an overriding clause that it would also classify for services to be an export and would not fall within the intermediary clause provided under section 13 of the IGST Act and 213, whatever it is. So this is so quite an interesting issue. And post representation, anything that any communication you had with the authorities or something, what is their view on this?
So, I mean, we have not got any much communication from the department. Only we get a feeling that they are looking into it, but normally we don't get any communication, because if you make any representation, either a circular comes out or nothing comes out. They generally don't respond to you.
So, thank you, sir. Now again, when we are talking, so there is a very interesting discussion I was having with one of the commissioners, and he was mentioning that in today's date, whatever notices that is being issued all across India to assessees, around 70 to 80% of those notices are in relation to input tax credit. I am not sure on whatever he has said on the arithmetic part of it, but definitely yes, with the kind of notices also that we are getting from our clients or whichever, we find that majority are in relation to input tax credit. But so again, in and round, we were trying, again, the question also goes across this credit, is that on this credit, I would like to ask Mr. Verma that is any issue you are facing typically on input tax credit, especially on account of this 180 days embargo which is being put across, that you have to do a payment within 180 days, failing which you have to again reverse. Then when you make a payment, then you can take it. So for a company so huge like Andrew, where there is It's a huge number of transactions, and especially how do you track this 180 days, or what is the difficulty that you are facing primarily in adhering to that 180 days thing? Do you think that this requires an attention of the government or something to look into it or give some leeway to the industry?
Yeah, definitely. If we see this provision and from 1/7/17 to 30th of September 22, the same situation was there. Last year, circular 19/22 effective with, that is not the retrospective effect, there's a prospective effect is there. So it is effective from 1st of October 23. So situation is this, you are not making the payment within 180 days. Okay, however, the department is getting the tax in time, and you are supposed to add the same amount as your output tax liability along with interest, and you have to pay it. So the reversal is there. Second thing, when you are adding it to the output tax liability, if you see the definition of output tax liability, it is contrary to that. If you see the section 282 subsection 82, it is not in line with the what is written in the section, that you have to add it to the output tax liability. So this is the issue which was resolved last year, but still the cases are there. If you are saying me to make the payment in 180 days, so what you want to say? You want to say that you have to make the payment irrespective of what is written in the Indian Contract Act 1872. So then the section would have been started notwithstanding anything contained in any act. Okay, so then it is okay. So last year they resolved this issue, realized that the problem was there, and it has been resolved. But the issue remains the same for the cases before that period. So the litigations are still there. And the cases of 17, 18, and in 19 also in NHI earlier, I worked for NHI for 3.5 years or so before joining NDU. So cases are there, and the people are facing a lot of problem with respect to that. So it is still there. So in this case, some kind of representation can be given that the field officers are not taking the cognizance of that particular circular with respect to the cases or the transaction which was happened before the issuance of this circular. So that can be taken care, and field officers should be intimated and direction, instruction, whatever given by the department to take care of the things which was pending since which was pending up to 30th of September 23.
Primarily, if to summarize, if you want to say that there should be a clear-cut instructions wherein for all pending cases, it should accordingly be dealt in line with the circular issued.
With the circular which
and
was issued.
There should not be any further notices issued in due for that period in line with the circular issued. Is that what? So quite an interesting, so definitely these things, because every time Bcc&I makes quiet representation, and Vivek primarily takes the entire charge in doing so, things we can all compile, and these things, if we can take it up offline, and then things can be taken in. And now coming down to the next point, Mr. Mundra. So another thing which is important and which suddenly came to my mind is in relation to reclaiming of credit. And is there such issue? Because if I recall correctly, this is primarily an issue between the center and the state. And in that matter, the assessees typically gets involved, and they are being sent notices for for no fault of theirs, and primarily what should be settled between the center and the state comes on with the assessees, and which is a very important industry issue. Any thought regarding this?
Sure. So, interestingly, you have touched upon something which is going live nowadays. So, it is in KCT we are having around 15 registration, and as a matter of surprise, the point which you have touched, we have almost received same as if the notification are although coming from these notices are coming from different state, but it appears that the content and the drafting is done by a single man. So, interestingly, I have received notices from Odisha, then Tamil Nadu, Telangana, several states saying the same thing, that the ITC, the reclaimable ITC, you are supposed to reverse and show it in table 4D1, 4D2. I'm not being precise with the number, but what I'm trying to address here is that this is something wherein every notices is saying that you please do this, so that the concern between, so that the state revenue, the permanent reversal out of the permanent reversal in which there is a state share, that can be dealt with and it can be taken up accordingly. So all these notices are something to do with some settlement between state and, as you correctly pointed it out, it is something to do with settlement between the state and the central, the sharing of revenue between state and central. However, as an assessee, so goes without saying that even if a notice comes, making a reply to it, and the place from where it is coming, how much weightage it is carrying. So under all these circumstances is also increasing the compliance burden, in the sense that it has, for me, if you ask me, these reclaimable and ITC reversible, I have been seeing nothing, I should not be saying the exact word, but precisely I should say that it is not of such a paramount importance that these issues of reclaiming and reversing the ITC should not become a point of concern, as long as I am taking the credit in alignment with section 16.2.
Now, just to add on, are you also for this receiving notices from enforcements as well?
Very true, yes.
So, is it also not adding burden to
so
this?
So as I said, when I said, now you, like when I was saying, I should not be very precise with the word, but now since you have mentioned, so the moment the notice come from enforcement, the weight it carries, of course, goes to a different level, which is, I believe all will agree. So under that circumstances, the fear factor also comes in the mind, that what will happen and all that. But my point is that it has simply nothing to do with the assessee, rather it is something to do between state and central, and these flood of notices, for me being one of the assessee, I am sure many of us sitting here should be getting these kind of, or rather must have received these kind of notices, which at the end of the day has increased their compliances, increased the drafting and all sorts of explanation, which irrespective of without any audit, we are giving detailed reply, which is not warranted as of now.
Quite interesting. So, but when we are primarily talking of notices, so I would like to come to Mr. Mukherjee on this, because now with GST, I guess for a service industry, you might be having decentralized registration pan-India. So are you also facing, or is there any unique things which you are facing, that similar notices, or what is the kind of experience or experience you are having, or an issue you are having which you think should be addressed? Because on one hand, when the government is primarily talking about reducing litigation, it seems that the litigation is rising multifoldly. It is though as a consultant or whoever are on the other side should not complain. But from an industry perspective, do you think that this galore of notices on same matter from different TA is creating some issue for you?
Yeah, thank you. So you've spoken of something which is very close to my heart. I just would like to take 2 minutes on this subject. So prior to the GST period in 2017, we are predominantly a service company. We had a centralized service tax registration. We needed to file just 2 returns in a particular year. Now we have 12 registrations for 12 months into 2 returns per month. That is, I think, 288 if I'm not wrong. So today I'm filing 288 returns. Then I'm also an e-commerce operator. I operate in 26 states. For that, 26 into 12, again, close to 300 odd returns filing. I mean, can you just imagine, I mean, I file 1.5 returns per day. 500 odd returns I file in a particular year, so which is almost 1.5 returns per day. So there's a huge increase in the cost of my return filing. That is the first thing. Second, issues. I had 1 registration, so against 1 registration, I used to receive a centralized notices. All my notices were in Calcutta, since my registered office and corporate office is in Calcutta. Now I am operating in 12 states. I get notices all across. There's some officer sitting in Jajpur who thinks that he can tax my entire all India income. He sends me a notice based on my annual report, the discrepancy between my annual return, which I have filed, and my 9 I have filed for Orissa, and my annual report, and casually taxes the balance as GST, which is payable to the government of India. Just creates a fictitious demand. And then you have to run around trying to get that resolved. Somebody in Chennai thinks that, okay, this company is doing so well on its balance sheet here. However, the local trial balance is showing a loss. So there must be something which needs investigation. So suddenly at 1 o'clock in the afternoon walks into the office and starts demanding all the books of accounts. I mean, these are all practical things I faced. I mean, the last 7.5 years of GST. These sort of practical experiences we have had to face, and I think I'm not the only one here. Many here have faced such things where suddenly you get this thing and you have to fly down to Chennai in 2 hours notice to handle the state department there. I mean, I could go on and on, but I don't want to take the time.
Now, just the final set of questions to the panelists, so one by one. So, Mr. Verma, did you think that is this introduction of GST or this robust tax system, as you rightly said when you started your deliberation, that it's not physics or mathematics or something. So, is it some kind of something which has been done in a hurry, or it would have been more robust, or there would have been much more detailed analysis, or more importance should have been given by the government on these teething issues by the assessees from time to time, and addressing to make or to primarily help in the ease of business?
Yeah. So one thing is always there, that at one particular point of time, you cannot forecast and foresee each and everything what will happen in the future, and you cannot set a certain rules, regulation, provision, section, subsection, all that in a particular fashion also. If time permits, I can just say that whenever you raise any issue or concern with the department, and there are 2 things. One is the genuine demand, and another thing is the wish list. Okay, if I say that in my case of tea industry, this is HST is being used, and for that I am not able to take the credit of that, ITC had not available to me, and it is costing 1.5 rupee or 2 rupees per kg or so, that is my wish list, because it is totally a completely different business. It's a very big chunk of the revenue for government. which can never, I think so, which can never be in the process of ITC. It cannot be. Even if it comes under the GST, it's my personal opinion, it comes under GST, then definitely it will be under the category of the block credit or so under section 705 or so. So if the demand is, demand means if you have something to say to the department, to the government, and genuine things is there, like in case of NHAI, then that representation was continuously followed up by us for almost 2.5 years. And this year, 26 June 24, that circular 221 by 19 was issued. This is particularly related to the HAM project, which is, you can say that it's a particular or unique thing with National Highway, the hybrid annuity mode, where the 40% of the total construction cost of the project is given by, financed by NHAI, and the 60% is given by the, I'm cutting short the complete discussion, and 60% is borne by the contractor. So in that case, what is happened, that the completion of the project, say 24 months or 30 months or 36 months as per the contract. So the department and the GST was payable by the contractor for the 40% of the amount, because the contract is like this. If a contract is awarded, say 1117, and you have been given the time to complete the contract in 3 years, okay, so the 40% of the total cost will be paid by NHAI during that period of 3 years, and 60% will be incurred or borne by the contractor. So after completion of the contract, when the COD is done, say on 1/1/20, after 3 years, so department was claiming, and so many notices were issued to the contractor or the concession. Normally, we call it the concessionaire in case of NHAI. So many notices were issued by DGGI. What they were claiming, that whatever the completion is there, so you give me the tax on that 60% amount also. While the contract was like this, that the 40% will be paid by NHAI during these 3 years, and the 60% along with interest. Interest means that there is a specified rule that the top 5 banks, MCLR plus 1.25%. Okay, so this is the interest to be paid by NHAI to the concessionaire. Half yearly installment for 15 years. So 30 installment will be paid. But the department and DGI is claiming that you pay the 60% completion cost during this 3-year period also. So that was taken up, and this matter was went on for 2.5 years or so. 2-3 reminders were given, and this year itself, the circular was issued. So if whenever we take up our matter in a very positive way, and we say that it is not a genuine demand by the department, and whatever they are asking is not at all payable by the concessionaire, so that can be taken up.
No, absolutely correct. But most importantly, what you are trying to say is the time taken to resolve an issue is the sense, because I fully agree with you on this point, because on various representations for industry where I was involved, one of the very important was really relating to the GST rate on ropeways. Though it seems to be what is ropeway, because ropeway, tax on ropeway was 18% when it got introduced. And it is a mode of public transportation across India, because a lot of publics use ropeway across India as a mode of transportation. And it was the only mode which was of public transportation which was liable to 18% GST rate, with credit though. But it was quite a lot of burden on the tax, on the people who used to avail ropeway services, because that was the only services which was available for transportation. It took 6 years for the government to understand and finally come out with a notification reducing the rate of rough waste to 5% with credit of services only. So the point what sir is trying to primarily make is, if it's a genuine matter which is causing actual or genuine hardship to the industry, the time to resolve a matter should be reduced so that these things can be taken care in a much faster way. So irrespective of the fact that what is implemented, what time, which is in our language we call it turnaround time, TAT, so that should be faster. So on this I would like to ask, since we are discussing on the issues and how things are, so I would like to ask Mr. Mundra, like, do you think that within GST your cost of litigation, or perhaps the litigation, is higher compared to the old regime, or it's the opposite?
Well, precisely, I firmly believe that the litigation, coming to the litigation a bit later, first I'll just try to tell that, of course, there is a simplification. Simplification in the sense, the old regime wherein we were dealing with excise, service tax, then VAT, CST. Of course, with GST, there is a simplification. There is a cost reduction also, in the sense that first you were having multiple litigation in terms of service tax, excise. Now it is limited to GST. But as far as cost reduction and time of litigations is concerned, so things being going round and round towards GST, I would rather say one has to not only see the cost limited to the legal cost or professional cost one is incurring for dealing with the litigation, but prima facie in the beginning also of this panel discussion, I just touched upon the fact of contingent liability, which somewhere or the other is also increasing our interest cost and impacting the credit rating, because of late you must be aware that the bankers are also considering the contingent liability, and not only limited to the tax liability but along with the penalty and interest. So for instance, if a case is for that of 2017-18 or 18-19, the interest itself doubles the demand, then penalty, all we know, of course, if we are not talking about section 73, if you are talking about section 74, is almost all the time 100%. So one has to also factor that whether that is also attributing to your cost. Goes without saying, professional fee, legal fee, these were always there, be it pre-GST regime or post-GST regime. But then this new trend wherein banks are coming strongly with the thought of taking and considering the contingent liability also as your demands is also somewhere or the other to be factored in. If you ask me from a KCT perspective, from my experience, I would rather say there are two answers to your question. One is for those who are into goods and manufacturing industry, then the concern remains that whether they have to go for distinct person registrations at each and every state. I believe in case of service industry, again, it depends like whether you have to have multiple registrations or where the place of supply is as per IGST rules. So it depends on case to case, company to company. But overall, if you ask me, yes, it is somewhere or the other a cost reduction method in terms of what we were complying with excise, service tax, VAT, CST, and all those laws of entry tax, whatever, that no way or the other it has been simplified.
That's quite encouraging to hear. But on the other hand, if I talk about a cost of compliance and why I am asking this question to Mr. Mukherjee, because perhaps you used to have a single registration. Today you have, and likewise, you were saying that it is 1.5 returns you are filing every day, perhaps. So, for you, do you, what is your experience in relating to the cost of compliances?
No, this thing, I mean, compared to what Govind said, my answer would be different. I would say my cost of compliance has gone up. Because earlier I had one registration, I had to deal with one person. Now I have to deal with 12 people, often in far-off locations wherein our accounts is centralized, so we don't have people there on the ground. So either you have to engage a consultant there, or either you, if you have to do it yourself, your person has to travel from here to that location. So obviously there is a huge cost, and often we find that for very similar issues, similar states raise very similar notices you get, which is almost in the, as Govind was saying, almost copy paste of each other. But you have to answer to each and every notice which you receive. I mean, there are numerous calculations which you have to make and respond. And before the things get time barred, the department starts putting on pressure on you to close the issues. So you have to act in a very short time. So often you need to augment your staff also at that point of time with external resources.
Thank you, Mr. Mukherjee. So to sum up, it seems, just to give you the overall summary, it seems that for some, as we started, GST has really worked out because of the simplicity, one nation, one tax concept, so everything coming, so removing all the multiple taxes, everything, so it has become quite simple, but the same might not be true for the other, which is the reality on land, but it's still an issue which people cannot address. But on the other hand, there are certain issues which the industry is facing, like we are talking about the transfer of credit between distinct persons, which is there so far as the cash transfer is there in the CL, I guess, to PMT09 or something. But so far as the credits are concerned, which is quite very important, the issues relating to intermediaries, the issues relating to all these credits where irrespective of all these multinationals, large government companies or undertakings where there is so much of a process of taking a vendor, but still if somebody is being denied credit for the fault of somebody, yes, we all know that there are circulars given, there is a 16.5 coming, all these things are there, government is trying to put in amnesty, but still there always be a difference between the cup and the lip, because something which might be, which I think it might always not the other person think. And another point which I thought, and I'll talk on behalf of everybody, is I think the education perspective or the knowledge perspective in and around GST should be there even with the department, because what happens that at the senior level where you get a comfort when you go and talk, when you go and have a discussion, they give you, but what happens in most of the notices are all being taken care by the junior level, where the way they think or the way they are trained, that becomes an issue for lots of assessees. So this education perspective from the department and also should be improved manifoldly, so that it also helps the assessees at large, because GST is primarily being introduced for ease of business and making India more competitive in the international market. So that's all. Thank you for a patient hearing. So over to you, Shormani.
Thank you, Mr. Dasgupta. I request Mr. Vivek Jalan, chairperson, to please be on the dais, and Mr. Ashok Mukherjee, one of the oldest member of the Fiscal Affairs and Taxation Committee. We have a pleasant task to perform. I request Mr. Jalan and Mr. Mukherjee to please present mementos to the moderator and the speakers, to Mr. Dasgupta, to Mr. Debashish Mukherjee, to Mr. Verma and to Mr. Govind Mundra. Thank you. We will now move towards our next roundtable session on income tax. I request a moderator of the session, Mr. Vivek Jalan, Chairperson of the National Fiscal Affairs and Taxation Committee of the Bengal Chamber and partner Tax Connect Advisory Services to please be on the dais. I request the panelists to please join. Mr. Shroto Gopal Mukherjee, Senior Deputy General Manager, Direct and Indirect Taxes from Exide Industries Limited. And Mr. Gautam Sengupta, Senior General Manager and Head Taxation from Eveready Industries India Limited. Before starting the roundtable session, we also have another pleasant task to perform. We have a book launch. I request our Director General, Mr. Shubhodip Ghosh, to please be on the dais. A book on income tax by Mr. Jalan. So I request Mr. Ghosh to please unveil and launch the book. A 3-voluminous book on income tax by Mr. Jalan. I request Mr. Jalan to please take that roundtable session forward.
Okay, thank you. Thank you, Sharwani. And last session of the day. So we will have this session with solutions, okay, rather than problems. There are problems in income tax from 1961. Okay, so let us talk about solutions and intriguing issues. And without much ado, I will immediately go to the one of the problems, a pleasant problem, how we can increase our bottom line, that is section 244A of income tax on how to calculate refunds under income tax and interest on refunds in income tax. I'll go with Mr. Shroto Mukherjee first, who is handling the taxation in Exide Industries. So, Mr. Mukherjee, on 244A, whether we'll get interest on interest, we will get only interest, on what amount, your views.
Yeah, thank you first of all, for inviting me to this panel discussion. Thank you, BCCI. Yeah, so obviously, that section 244A is a contentious topic. It is very, what I should say, the interest obviously, adds to your, as Mr. Jalan said, that adds to your bottom line. But it is a very difficult thing to actually get from the department. So our experience has been, in that sense only. So what happens is that, the practical problem is that, supposedly even if you get an order giving effect from the assessing officer, that means the jurisdictional assessing officer, and the order is supposedly uploaded in the ITBA portal, say supposedly in November 2024, and we get the refund actually in the, say, after 3-4 months from the CPC. So we don't get the interest till that actual date of refund. So again, what is the recourse? You have to file an 154 petition to get the part interest which we have missed. That means the date of order till the date of actual grant of refund. Because if you see, there are plethora of case judgments, both Kolkata ITAT, Mumbai ITAT, Lucknow ITAT, which have specifically stated that, the refund should be, interest should be given to the date of refund. So date of refund is basically the actual cash receipt in my bank account. But that is a far-fetched idea, so we have to go on pursuing. Another thing what we have seen is that, the AO is very averse to giving, interest under 244A1A. That is when there is a delay in, giving order giving effect beyond the stipulated period. So we have to pursue that also. Because I have never seen any order granting interest also under 244A, which considers 244A within bracket 1A. That's the extra 3% interest. So only recourse is to follow. And one thing also I would, like to say that, what Mr. Jalan was trying to say, whether interest on interest, I think we have, Andhra Pradesh High Court judgment which says specifically that interest on refund is very, it's not actually not allowable. It is distinguished from the Sandvik case decided by the Honorable Supreme Court. But there can be another situation also where it is happening that supposedly we know that, that 10% is the threshold, in the sense that, our refund should be more than the 10% of the tax payable. Otherwise, the assessees are not entitled to get refund. But for any reason whatsoever, if we see that the refund has not been granted and it's maybe a sizable amount, so I think the recourse would be to, challenge it in the court. And I think the assessees, because it all depends, again, you have to, weigh on the litigation cost as well as your probability. So you need to make a calculated, what I should say, risk, and go forward to seek the compensation, not because technically you cannot get an interest under 244 because you are 10% that threshold you are not breaching. But why we should, leave aside the compensation part. So I think that could be the way forward.
Okay, so Mr. Sengupta, who is handling the taxation in Everready Industries. So over to you, Mr. Sengupta. Your views on 244A, whether interest on interest is available, not available, while Mr. Mukherjee has cited Andhra Pradesh High Court judgment, your views on that.
Yeah, actually, Srauto has already dealt with all the provisions of law. I would only add one point, that is this percentage of percentage cap should not be there. There should be a limitation as a monetary cap, because suppose there's a refund of say 80-90 crore the income is 80-90 crore and the refund is less than 10%, 5 crore, 6 crore, then the section 244A, as per 244A, it will not be refunded. So I don't think this is very practical. If it was the other way around, SSC had to pay and interest, I don't think income tax department would have allowed the SSC not to pay the interest if the demand is less than 10% of the total income. So I think this is a lacuna and we as a group should take it up. Other than that, I have nothing to add in this point. Srauto has covered most of the points. So I think that's my take on this issue. And what Srauto is facing, interest on interest or from the date of order, 154 order to the date of refund, we had to really face a huge difficulty. In fact, for us, our company, there are still refunds which we have not received. The date of order, say, is in March. The refund has been granted. Date of order is March. The refund has been granted, say, in July or August. So the in-between period, when we have filed another petition under Section 154 for the interest for the in-between period, it's just lying there. I mean, in fact, the adjudicating authority is also not very sure on this. So this is a real problem and we from the chambers should take it up and really ask for a solution to this.
Okay. So, so no interest on interest. That is the take of the panel, is it?
Yeah, I feel so, Mane, because that's what my personal feeling is.
But then we have, you know, just to one last point on this, we have a Union Bank judgment also by the ITAT Mumbai, even after the Andhra Pradesh High Court judgment, I think, where the court has allowed an interest on the words that where amount is due to the SSE. So the amount due to the SSE, it becomes, you know, with the interest amount. That is the amount due on the return filing date, right? Because interest is from 1st April.
Right.
So, even then, no interest or interest?
Yeah, honestly, I have not seen that order. I need to go through that order. But at least let us get the interest till the date of refund.
Correct.
Let us be realistic.
Right.
Interest on interest is obviously, you know, wishful thinking. And yes, if there is a judgment, maybe we need to follow up. But let's go step by step. That's what my take is.
Okay. So, now the question is, you have raised a point on follow-up. Whom to follow up? In CPC?
Yeah, CPC, oh God. Anyone who has dealt with CPC knows that it's a black hole. Sorry to use that word, but that is what it is. The JO is actually helpless before the CPC or the ITBA. And the fact remains that, you know, that the ultimately for an SSC, we take the income tax department as one. But unfortunately, the income tax department does not think they are one. They work in silos. The ITBA does not talk to CPC, CPC does not talk to JO, JO does not talk to ITBA like that. So what would the hapless SSC do? Run from pillar to post? No, nothing. There is no post. Only run to pillar. That is the JO. And request his, you know, inspectors and officers therein. Please see what is there in the status. And ja khul ja sim kuch khul jayenge to dekhega call book mein kuch reply aaya hai. Kya reply aaya? God knows. They cannot also decipher. So again, you have to do that wait. So I think, you know, honestly, that's what one of my suggestions or, you know, request would be through Chambers of Commerce, and we have been, you know, doing it. So there should be at least a nodal officer, you know, who can coordinate between the three, you know, departments, and at least whom the SSC can approach for a practical solution. Otherwise, what is happening is that, you know, when it talks of, you know, governance, principles, it is all very wishy-washy, you know. I know the revenue secretary, the finance minister says these all lot of refunds have come and all that. But those who are actually visiting the department day in and day out, you know, to getting an order giving effect, to get an, you know, refund done, they know what is the real pain. as far as the order giving effect is concerned, as well as the rectification orders are concerned also, there are timelines stipulated, right? 3 months is there, 6 months is there. But can anyone vouch that actually they have got their order giving effects or the rectification orders within that timeline? I don't think so.
No, in
Because
fact,
because
just interrupting,
Yeah, sure.
CPC, the customer care section, what they are maintaining, actually is, I mean, very, very just for the formality.
Right.
So
right.
what you are telling the nodal officer, when you have asked, they have shown the customer care, which is very ineffective.
Exactly. So we want a physical nodal officer who can sit in the supposedly Ayakar Bhavan here. At least someone to approach. That's what my view is.
Correct. And each and every state should have a department in the income tax office itself who will represent CPC, so that we as an assessee have direct touch with the CPC. Whenever we go to our adjudicating officer who had passed the order and the refund is awaited in the CPC, his only answer is, I have nothing to do, it is lying in the CPC.
Correct. That is the main reply for them.
Right. So CPC, yes. I mean, we will represent as a chamber on the nodal officer bit. But Mr. Sengupta, I'll come to you. Almost everybody in this hall, who are present, are facing this issue of 194Q versus 206C1H. TDS versus TCS on goods. No, many problems are there. First let us discuss the problems, then the solution.
Yeah, but before answering or before getting into this issue, I would like to congratulate Vivek for this release of this book, and seeing this, the first thing comes to my mind is the Ramaya law of this series of books. It's really, I mean, it's a hats off to Vivek that in spite of his daily other jobs and tremendous busy schedule, he is able to publish this. We'll definitely go through, and I hope it will be a huge success.
Thank you.
And
thank
I
you.
hope this effort will continue.
One volume is on TDS only. And half of it is 194Q and 206C1.
So tedious effort they given by Mr. Jalan. Kudos.
Yeah. So yeah, coming back to 194.
Yeah, coming to 194Q and 206C1H. If we can recall, first 206C1H was brought into the tax net, taxing the sale of goods for the first time under this collection of tax. See, this previously withholding or collecting of tax was dealing with only services, especially withholding of tax, and collection of tax in small, I mean very rarely on, it was on goods of course, but scrap sale, motor car, things like this. However, on sale of regular goods, this is the first attempt by the department to bring in the regular operation of sale of goods into tax net. Within a year, they have realized that this is getting too lousy. They have again brought in 194Q without abolishing 206C1H. As a result, what happened actually, now each and every company, while at the time of purchase, also at the time of sale, they have to get a declaration from the other company. The buyer has to get a declaration from the seller has to get a declaration from the buyer, whether his turnover for the last financial year is 10 crore or more, and whether the buyer is agreeing to abide by the provisions of TDS and comply with the provisions. So getting a confirmation from the buyer the seller is confirmed, seller is determining his liability of 206C1H. Now, this is absolutely confusing coming to operation. Today only in my company, I have faced one issue. One seller, they have written to us, you immediately furnish your financial account, financial report, and let us know. They have given a huge declaration whether you are agreeing to abide by the TDS provisions. So, Mr. Jalan, so I don't think there is any requirement of these two sections simultaneously. If there is 194Q, then there should be a common threshold for purchase of goods, and that threshold, like other threshold, other section threshold, should be maintained by the buyer. If it is over that, for the turnover, in fact the turnover threshold is not required at all. The threshold for 50 lakhs for each and every transaction, that is enough, I think. The turnover for threshold, why is it required? So 206C1H TCS on goods, I don't think if 194Q is in operation, 206C1H should be there in operation. This is a creation of a utter confusion. So 50 lakhs turnover limit, 50 lakhs limit for transaction can be there, no problem. The rate is also very low, 0.1%. So it can continue like that. Why 206C1H? When 194Q was introduced, at that point of time, department should have told that 206C1H from that date will not be into operation anymore.
No, so right. I mean, we have represented, but it is a reality, it is there. So you as a company, or maybe no, not as a company, but what is your view how to deal with this? If my, say from both point of views, say I am the seller, right? And when do you come to know, or when do you track whether the buyer has deducted TDS or not? Or if you are the buyer and you don't have a turnover of 50 lakh from the customer, so how do you determine whether he is charging or not? Specifically if you are the seller.
Correct. See, if I am the seller, what I am do, I have no other option than to take a declaration from the buyer that his turnover for the last financial period is more than 10 crore or not. If it is not more than 10 crore, then what we are doing, we are raising a debit note at the end of the month for the total sales made, seeing the value of transaction made with that buyer. This process we are following now. And in case of a buyer, since we know that our turnover is more than 10 crore, we are just deducting tax at source if it crosses the threshold limit under 194Q. And that TDS thing is done as per the other sections of TDS on each transaction basis. Not at the end of the month, what we are doing for 206C1H.
So if you are the seller, every month you are raising a debit note.
Every month at the end of the month we are raising a debit note.
For TCS?
For TCS. If the seller gives the declaration that his turnover is less than 10 crore in the last financial year.
Okay, so this is one solution. Mr. Mukherjee?
Yeah, so what we have done in our company is that, so by default, that our SAP system is configured such a way that unless, see, there's two things: onboarding of vendor, onboarding of customer, right? So when we onboard a customer, so we have generally OEM customers and dealers. So generally OEM customers, we know that obviously their turnover is more than 10 crores. So we go somewhat on assumption basis also for a practical perspective, because what we have seen earlier is that what we used to do, so what our SAP system is configured so that once the 50 lakhs threshold is crossed, it starts charging TCS, right? Now, what happens is that, as I was saying, that for one OEM customer, unfortunately, no one had given the mind on while onboarding, so we had charged TCS, and we had deposited the TCS to the returns and all that, but the OEM just refused to entertain that TCS amount. So they said, no, we are doing TDS, why you have done TCS? So it's a marketing department's problem, but we had to live with it. So what we have done is that, for onboarding of vendors, obviously we know that when we onboard the vendors, we take a declaration that, Excite being a company which is having more than 10 crores turnover, will be deducting TDS when your threshold is A. So please don't charge TCS. And if you charge TCS, we will not reimburse. So that end is A. Only for the customers part, what we are trying to do is that for government customers, obviously we are not supposedly charging TCS. And what happens now, the practical problem, what we are facing day in, day out, in the sense when we are filing our regular TCS liability for the month, my colleague here will vouch for that. So what happens when we onboard a dealer? So he has a PAN and all that, right? So he's not having, turnover of 10 crores. So we are charging TCS, but ultimately what is seen is that its PAN is not Aadhaar linked. So now what happens? We have charged TCS at 0.1%. Now we are supposed to do at 1%. Again, we have to, for those cases, we have to charge the differential of the 1% minus 0.1%. So that is actually a main pain thing. So we are trying to implement, in the system, we are trying to address these issues, but that is actually a stumbling block in the implementation of this.
Are you each and every time, I think the known customers, one declaration at a time for 1 year is enough.
Right.
If there is a new customer, only declaration is required.
Right. But supposedly for OEMs like say Maruti, Hyundai, so obviously we are not honestly.
Those are okay.
We are not taking any declaration because we know they will not give declaration. In spite of that, even if we charge TCS, it will be a waste to us. That they will not reimburse it. So we'll have to file again, revise TCS return. So we are going on a practical basis, honestly.
Right. So customized.
Customized
Regular
according to the
customers,
customer.
yeah.
That is how business runs.
Good, yeah. So now this is on the customer and buyer side, and we had intriguing sessions on GST, and some of GST is flowing into income tax. I suppose. So a very critical thing in GST, which has just almost come to an end, which Commissioner Sir was also speaking about, is this related party, cross-charging in GST. Now say suppose you have a brand, there is a company A who has a brand and it has a subsidiary B which is running on the same brand. What to do? Do you cross-charge the brand building expenditure? And for everybody here, this is a new thing which is coming up, it seems, in income tax. Does company A, which has built up the brand over the last 25 years, does it raise an invoice for the part brand building? Or if it does not, is there a chance in income tax that it will be partially disallowed?
Yeah, so basically what I think Mr. Jalani is trying to say is about the AMP. So advertising, marketing, promotion expenses. So honestly, AMP as a concept was basically earlier into transfer pricing regime, right? So whether, supposedly, a Maruti, supposedly, I'm sorry taking names. So supposedly it has, a brand built for Suzuki. So whether the expenses incurred by Maruti would be, allowed because it is also building brands for Suzuki in India, right? Now, as Mr. Jalan was saying, that yes, it has now, transpired into the domestic income tax also. And there are case laws actually, which says that, AMP expenses would be allowed subject to, so it's a factual matrix actually. You need to demonstrate that actually you have incurred the business for commercial expediency and it is incurred for your business. right? So in case, earlier there was one case law, if I remember correctly, Discovery Communications, wherein it had actually disallowed the fact, because what was Discovery doing? It was entering into such promotion expenses for which covers its AEs also, associated enterprise also. So it was disallowed. But I think a recent judgment, from Bangalore.
ITAT Bangalore.
ITAT Bangalore, Sara Soul Private Limited.
Sara Soul Private.
Right. Where the issue was that, it was actually expending, for the promotion of the business of its director. So whether it was construed as a personal benefit to the director or not. So luckily, the Bangalore ITAT has, going through the fact matrix, has, opined that, no, because it was, it was done for commercial expediency, so it would be a legitimate business expenditure, and the SSC has got the deduction under 37(1). So basically, we need to see the facts and accordingly decide the case. That's what my take is.
Okay. So, Mr. Sengupta, I'll come to you. So many problems are there, and you have been instrumental in our National Fiscal Affairs and Taxation Committee on making suggestions to the CBDT on the Income Tax Act revamp, right? And as you have discussed on TDS, that is the most tedious thing today. So on the new Income Tax Act or comprehensively reviewed income tax, what are the suggestions for TDS perspective?
See, TDS is a tedious thing not today, since beginning. And actually the objective of TDS is to withholding of tax in advance of a person and to plug in the revenue leakage. But now the situation is such that there are, starting from section 192 to 195 or 196, there are almost 45 to 50 sections. So each and every year, at the time of introducing the finance bill, one change, either procedural or in the section, will be there in the TDS, full TDS chapter. So there is a utter confusion amongst all the assessees, all the companies, and huge time being spent to determine that what will be the section. And there are some sections like 194C, 194J, in some cases 194I also. It is very confusing. Whether in a Kumbh Mela, a stall has been put up, that will be under section 194I for giving of space, or since we are paying a consolidated amount to the event manager for building the stall and everything, what will be the section, C or I, or in some cases whether under 194C it will be a work or it will be a professional service under section 194J. There are utter confusion. Now this confusion leads to, in some cases, issuance of some company takes a stand, let us deduct at the highest rate. That is, in case there is a confusion between 194J and 194C, let us deduct at the rate of 10% to be safe. But that cannot be a solution, because on the other hand, the person from whom you are deducting, although he will get a credit, but in some cases he is not coming on the tax net also. And getting refund from the income tax for the small taxpayers is very difficult. So they immediately comes back, no, then we will not do the work. This is a huge operational problem. So this is really required to bring a uniformity in the rate of tax, abolish the sections, so many sections, preferably leaving apart salary and 195, preferably in between all the sections, there can be one for sale of service, one for sale of goods, and one for sale of immovable property. I mean, there can, if for a sale of service there is only one section, there will be only one rate. So there will be no confusion. Nobody has to break his head. Are baapre, which section it will fall, what will be the rate, department will issue a immediate notice, and TDS everything is auto generated. At the time of filling of filling of the challan, instead of C they have given inadvertently J. So automatically the rate will be changed. TDS, the traces website will catch up and throw a auto generated default and the demand. All these things will go away. So it is very much needed, since income tax is going through a change. Maybe there will be a no direct tax code, but there will be a lot of changes. So this requirement of bringing uniformity in TDS sections by clubbing all the sections and with a uniform rate, I think is the need of the day and the need of the all the assessees.
No, so very elaborately pointed out. This is the suggestion. Of course, this is the wish list, and I think we had, we have met the Bcc&I over here also, and they are actively looking at completely revamping TDS and TCS. But coming to this practical problem today, after this budget, an amendment has been made in section 194C.
Correct.
Which states that in case any TDS is falling under 194J, it will not be
explicitly not will be under 194C.
194C. But the problem, and this is Bengal Chamber had also represented, the problem is in 194J, where FT, free for technical services, is 2%.
Correct.
And professional is 10%. But if you see the definition of professional services, there is the technical word is also written over there. So what are you doing? And in case there is a bill, what are you doing? 194C, J, 2%, 10%, what?
No, see, I think there was further more confusion before 2020. In 2020, they have brought in this technical service rate as 2% instead of 10% by amending 194J. So previously, what the assessees used to confuse that this is a work under 194C or a technical service under 194J. Since the difference in the rate was 8%, there was a huge problem. But now they have made it 2% uniform with 194C, and in this budget, by changing the definition of, by adding one clause in the definition of work under 194C, they have specifically given that under 194J, if anything falls under 194J, then it will not come under 194C as work. Now coming to your question, what we are doing, specifically the professions which were listed out in the Income Tax Act, if it is under those professions, we are doing 10% under 194J. Other than that, we are applying 194J technical service. In some cases, we are doing 194C also, because that does not matter much because the rate is same. But we are sticking to that, specifically the professions which were listed out.
Okay, so for whatever is listed out in this 44AA, you are doing 194J, 10%, balance 2%.
2%.
Okay. So, Mr. Mukherjee, I'll come to you very quickly. We have 3 more minutes before we ask the audience, in case they have few questions. So, your suggestions from your company on this Income Tax Act revamp?
No, so from my company, see, obviously, that's the, what from my company, not specifically, what is the wish list of, the trade and industry that is there. Because obviously, the simplification of TDS, TCS, what, Mr. Sengupta was saying. Now, from the general perspective, that, there's confusion of financial year assessment year. I think we tax persons know what is financial year, assessment year, but if you ask any people down in the street, they are confused. So why unnecessarily create confusion, right? Financial year, assessment year, we don't get anything extra, by defining these two things. So these can be one, and there are also certain redundant, provisions which are remnants, still remaining. So supposedly Wealth Tax Act is gone, but there are cross-reference of Wealth Tax Act is there. Then, what comes into my mind is that, there's one section on 36(1)(10), earlier it was there for, family planning expenses. Corporates were, induced for, promotion of family planning between office employees. Now individual employees are, more or less doing it themselves, and so the company does not bother, and so, but these are remaining. Then ATO for deduction of, I think, royalties on, TDS on royalties, which is also there. And another thing what I find is that, the government's intention is to, bring this Vivad se Vishwas thing, very frequently. So if we want to bring it very frequently, why not make it a part of the act? That's my personal view.
This was,
Vivad se Vishwas, so this is what I need to do. If I don't do this, I have a Vivad se Vishwas Act coming every 3 years, 2 years, I'll do this and get away. So that can be one, wishful thinking one may think of. And another thing is that, but honestly speaking, that, from the general perspective is that there should be specific guidance and, circulars for specific type of industries. Say supposedly startups, those who are doing digital economy, as Mr. Devashish was saying, that e-auctioning it, if there is a specific requirement. So that actually makes life of every SSE, easier. So every SSE feels that, yes, that the finance ministry is thinking of them and doing acts or actually acting in certain way which helps them in ease in making business. Otherwise, just speaking ease of doing business, but when you try to do business, you get all the disease. So then doesn't make sense actually.
Okay. Actually, previously it was Vivad. What you are talking is of income tax going for Vivad se Vishwas, but then I think it is the opposite. Vishwas se Vivad.
Oh, what you
Vishwas
mein Vivad.
Just so one point I just missed out regarding TDS and the revamping of Income Tax Act on TDS. The reimbursement part, that is another huge problematic area in case of C and J especially. Because in 194I they have already told on income that what they have used. However, in 194C, 194J, the word starts with any payment made. So any payment made may or may not include reimbursement. Reimbursement, the stand what we are taking now, many assessors are taking, if the bill of reimbursement is given separately with proof, we are not deducting tax because that is not an income. However, if it is included in the service bill, then without any proof, then tax is to be deductible. There is a confusion. This needs to be corrected while revamping of the whole TDS chapter. Srauto, you are facing any problem on this?
No, absolutely. Second that, we have also, decided that, this should be followed. Now again, taking this a different angle is this 194R. Now 194R FAQ has also this, aspect. Supposedly a consultant is having I am reimbursing my consultant for the travel done for me. Then again it comes under 194R. So obviously, it's, just, getting, what I should say, tedious day by day.
I have not touched upon 194R because the section itself is.
Fingers crossed.
Yes, the
194R litigation.
194R after issuance of the FAQ, it got more complex.
Yeah. Every FAQ and circular makes 194, but fingers crossed till now, government is still looking at litigation under 194R.
No,
I don't think many
and
notices
it is
have come.
more dangerously, it is
very dangerous.
It is related to GST also.
GST already started.
No, they are not looking into it. They are allowing us to make mistakes. Please understand that. They will come after 2-3 years when there will be obviously a penalty. And
bulky mistake.
Right.
Right. So, good. I think We have already almost come to an end. This can go on and on and on. Income tax is going on since 1961 and giving us lots of litigation, food for thought. But audience, any questions? Okay, yeah, 1, 2. Even in the last session, we have questions. So great, we have good energy. Yeah, please.
Good evening, Mr. Jalan, and to the panelists. So my name is Pradipto, and I'm representing M Junction. So coming to the section 192(2)(b), is 12P double F form, which is I think already introduced.
Your voice is getting echoed.
Is it okay now, sir? So coming to the section of 192(2)(b).
Perquisite.
Yeah, it's a recent amendment which has taken place from effective 1st October, which is warranting these employees to, I think, give a declaration of getting the benefit of TCS and TDS. And they have to file this 12BA to us, 12BAA to us. So what would be the standard documentation process? Like we have to collect 26 A's which is being filed quarterly to substantiate this and allow them a deduction, because somehow, I mean, we are the intermediaries between this deduction.
Yes, I think they have already brought in a change in Form 16, giving a provision of that, number one. Number two, as a deductor you should be very sure that that has actually been collected from them. So there will be no standard proof. Suppose for foreign travel, if there is a TCS, or sale of motor car, if there is a TCS, you have to get the document, because 26 QB, I mean this TCS for that there will be a deduction, there will be a document for that. The person to whom you are paying this for foreign travel, the travel agent, they will be collecting tax from you, and they will be filing a 26 QB form or something like that. So you should get that document as a person responsible for deducting tax on salary.
So we should collect this both 26Q as well as the invoice.
You have to get. Okay. You should not depend on only the declaration by the SSC.
So I have just one more thing, sir, which is regarding the HRA deduction under the Income Tax Act, Section 1039. So, I mean, the fiscal year end is in swing. So we find it from most of the employees that nothing is mentioned in the provisions of the Act. They do come and challenge us, like there was no one mentioned in Income Tax Act as to whether you have to submit a leave and license agreement. You can only just submit the HRA documents. That is sufficient enough.
I think in HRA, the document required is proof of payment of rent, number one, the address and the PAN of the payee. These are the documents mentioned in the Income Tax Act. Additionally, you can ask for the license agreement or the rent agreement with the landlord.
We don't require the PAN below 1 lakh annual rent.
Of course.
Obviously.
Below 1 lakh, there are very few houses now. Below 1 lakh means 8,000 per month. So, considering that most of the now in city, below 8,000 is getting it very difficult. So, PAN is required of payee, of the landlord, address of the property, and the proof of payment of rent.
So, sir, although this has been a practice in our organization for quite a long time, so should we discontinue this or keep on taking the agreement? Because otherwise people will
don't discontinue. Don't do, please. There is an additional one when the employees are agreed to give that. Why discontinue?
So one more thing, just the last one, which is regarding inoperative PAN. So in the 24Q last year, we have, after filing the returns, we have found that quite a number of people have got inoperative PAN, which is why we could not really file a revised return, because they have not converted into an operative PAN. And basis that, we could not generate the Form 16 as well in time. Some point of time, maybe 1 or 2 days there was a delay. And while we chased the employees for getting it linked, PAN with Aadhaar, in that intervening period, there was a lot of interest which was accumulated in terms of late filing. So this is again shifting to the employers to some extent.
So what we did here in this case, so we had also this similar issue. So what we did is basically, obviously we paid the, upfront, and basically we informed the employees that please understand this is a statutory non-compliance. We had believed that you had done this compliance, but it has not been done, and as a result the company is forced to pay, but we will deduct it from your salaries going forward. So, and we deducted it in installments.
No, but what happened if that employee is no more with the company?
Yeah, so those there were 2-3 cases obviously that would obviously be there, but we have to live with it. So once bitten, twice shy. Now we have actually run the PAN check for all the employees, because we at least thought this would be we have to do for our vendors. We did not anticipate that for our management staff. See what had happened. Actually, this has happened for our the employees who are in factories, generally not in HO or corporate offices. But for factories, obviously there could be persons, who has come and we are not so, well aversed maybe. Maybe there's also lacuna in our, communicating these laws. Because see, we sitting here, we being tax practitioners, for us it is very easy. But say from a technical guy who is, on the shop floor, he might not know. So it is in our interest also, or the employer's interest to, at least, intimate to all employees concerned what are the changes, what it is affecting. I'll just take an example of this new tax regime, right? So whether we have actually, it is our onus also to inform the employees the new tax regime, and as a proactive practice to demonstrate that what would be happening, that whether if he or she does the tax filing under new tax regime or the old tax regime, what is beneficial. Because at the end of the day, we as an employer also have some responsibility towards our employees. So we can think on those lines also.
In such a case, the interest which is being, paid by the organization, in that case, can it again be recovered from the employee?
So we have done that.
But it is a practical problem.
Thank you.
Okay.
Thank you, sir.
So offline you can take, you have a plethora of questions. Okay, yeah. This is the last question of the day.
I have just one query. So, say suppose if I have a refund of 1 crore and I have demand of rupees 10 lakhs, is department is justified to withhold our entire refund of 1 crore? Or there should be some mechanism that, okay, the disputed demand is 10 lakhs, 90 lakhs I am releasing, 10 lakhs you keep it as in dispute. So, how about it?
Mr. Mukherjee can answer this.
Yeah, obviously. See, the fact remains that I think, I am not recalling the case laws also, but I think in Bombay High Court there has been a writ petition on these. Supposedly, that 20% is the amount which can be, obviously it is disputed, right? You have gone on appeal,
yes.
Right?
Yes.
For the other year, the refund is substantial. So there could be two ways. You get a 245 notice, they say that, we are adjusting the earlier demand, right? And giving you 90 lakhs, that is one way. Or there is a case law also, I'm not recalling right now, offline I can check and let you know, that where they said that if you have gone for appeal, 20% of 10 lakhs you need to deposit, so that is there, and then you get the refund of 1 crore.
How to explain this to CPC then?
Sorry?
How to explain this to CPC?
Now you are coming to the moot question.
Yes.
That honestly, I don't have an answer.
No, but here has CPC withheld the entire amount?
refund,
Because
yes.
we have many taxpayers where
So they withheld the refund and
entire
send it,
refund.
Yes, so and send it to JOA, our local AO. So AO has requested that you release the amount.
Yes.
But CPC is still showing that it is with disputed
You see,
demand.
so
you keep on calling CPC and no one is answering.
AO, we went to the AO few days back and we said, ki sir, this is the thing, ye to, well, see, my mother-in-law thinks that I am the income tax department. I told her to file a return and claim a refund. Till now, her refund has not come and you are asking me for your refund. Thereafter, we stopped chasing the AO.
There should be some system that they automatically release the balance payment instead of harassing taxpayers like this, because our refund for last 2-3 years has been pending with CPC.
That is a practical problem.
So,
see, one thing is there here. Yeah, have you? What we do, raise a grievance to the PMO. Sometimes it works.
So we have raised
Prime Minister's
grievance to
office.
CP Gram. So CP Gram is always send it back
Do
to our
to
assessing
PMO.
officer, and he responded that
CP Gram is not very useful.
Not very. Do PMO.
When it was introduced, it was useful, but now they have known ways to circumvent that. So what they do, they give a just like that one response, and you take 30 days more time. So they have now
they will just send back
got
it
the
to your
flair of
assessing
playing with the
officer
CP gram.
Yeah, writing to the board is one way, but I think PMO sometimes it works.
Otherwise, if your stakes are high, file a writ to the High Court.
So मतलब
That is the only way.
CPC के against में कभी कोई रेट फाइल किया है क्या आज तक?
हाँ,
Yes,
बहुत
yes,
सारे
yes.
read.
So I
Yes.
think
No, that you can do.
with that
No, a lot of companies have done that.
because if CPC is not releasing the payment, so that is the last option assessee can have.
But REIT also has its cost.
Yeah, because
actually,
in the year 22-23, that period of time, CPC was undergoing a change in their system. So huge refunds were blocked. So a lot of companies at that point of time, I know, they have filed a writ petition.
Fine, so this gives me an alternative way for getting the refunds. Because for 1 year they will withhold the refund for entire life of the company for 10 lakh rupees. Anyways, so if time allows, I have a second question also regarding this MSME.
Last.
Yes, last only. So for this MSME, which
43BH.
43B disallowance, so instead of this cash payment basis, can it be made like others till the due date of filing of return? That would be only suggestion actually.
This question is to whom?
Panelist. And
To
anyone
the
can answer.
panelist. Yeah.
Anyone can answer.
Please come up with a question.
So we have a 43B MSME disallowance. So it says that if you have made the payment in cash, then only you can get in the year of cash payment. So unlike other sections which allow till the date of filing of return, so I think that allowance should be also given for this section also.
Absolutely
Anyways,
correct.
People are not doing business with MSME.
Absolutely correct, because in 43B itself,
Yeah.
this up to the date of filing return for other clauses are there. Not don't have to go refer to other sections. But this MSME they have added with a specific clause on the date of last day of the financial year. It's a huge disallowance. Everybody, all assessees are getting the pinch, but that pinch is only for the first year. Next year onwards, you will not have that hit because you will get the allowance for the previous year and again disallowance will be there. So effect will be more or less zero.
So I think that would be then just
Same problem lies
just
with
a
section
vicious cycle
40A 1A.
Just a vicious cycle every
The
day you
same
are
problem
getting
lies
the
with 40A 1A. The first year there is a hit. From the next years onward, the effect is more or less very negligible.
Because I believe lot of representations have already gone to Finance Ministry on this 43BH.
Yes, lot of
But for reasons
I think
unknown
Mr.
or
Jalan
maybe
knows.
Yeah.
He was telling the other day.
That is why I first said whom, because you see this, I have represented this in the pre-budget on 20th June this year before the Honorable Finance Minister herself. And this is something which infuriates her. So before me, the earlier speaker, he was speaking on something relating to NBFC. So somehow Honorable Minister, she thought he is speaking about income tax. So, you know, she started, and MSME secretary was also there. So I said, see, I have given tooth to your act and I am getting a blast from entire country. And I had this point as my first point. So I knew I am in for something. So I represented a little differently. I said, Madam, what you have done, I mean, that is a very good thing for MSMEs. But this 45 days, this is, you know, impractical. At least make it 90 days. Because that is general. Because we represented MSME also, we also represented to align it with second proviso to 16.2, that 180 days in GST, and they made it 45 days.
They should extend that period to 45 days
So
to make 90.
it is, you know, so somehow I wriggled out of that situation because my entire representation would have gone for a toss. So 43BH, you know, of course we should represent, you know, but we should be a little careful. Okay, so
thank you.
Thank you very much to all both the panelists for your time.
Thank you, Mr. Jalan. Thank you, everybody here, our distinguished fellow industry, my partners from the industry. Thank you very much.
Thank you to all the participants. Over to Sharbani.
Thank you, all the panelists and the moderator. Now we have a pleasant task to perform. I request Mr. Debashish Mukherjee, our committee member, of the National Fiscal Affairs and Taxation Committee to please be on the dais and present mementos to the panelists, to Mr. Gautam Sengupta, to our chairperson, Mr. Vivek Jalan, and to Mr. Shrota Mukherjee. Thank you all for joining us today. I hope you all enjoyed and it was a very insightful session. Thank you once again.